If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello, hello. Happy Wednesday, ladies and gentlemen. Hope everyone is well. Let me just move my camera. There we go. How's everyone doing? So today we have a little bit of a different schedule. So I'm coming on as the first guest of the stream. Then we've got Tiger, then Alan, Marco, and then we have Chris and Nick. So I know lots of people, when I start the stream, or anyone starts the stream that's not Nick, people get very confused. Where is Nick? We demand to have Nick on. Nick will be on soon. Just have some patience. Anyway, hope everyone's well. So I'm currently sat in gold shorts. We've been discussing this trade for the past couple of days, couple of weeks actually at this point. So I got into a pretty simple short. There's not really much behind this one. So I went short on the fib retracement and retest of the previous high. We at the time had gold bearish on the edge finder as well. And we have a bearish trend here. So the technicals were all, again, very, very simple and straightforward. Now, the edge finder has dropped off. Gold is no longer getting a bearish reading, but the reason that I'm still happy to hold this trade, and to be fair, in all honesty, I probably would have closed it yesterday. However, I wasn't at the charts. I was away from my desk, so I wasn't paying attention to anything. What we have had, and this is why I've still got it open, is a pretty large escalation in the Middle East regarding Iran. So we've had a couple of headlines. Trump, if we have to, we will take out higher level targets, may take over Kahang Island. I've got no idea how to pronounce that. Trump said the US-Iran Memorandum of Understanding is over. Trump and Iran, we knocked out 28 boats last night. There's all sorts of headlines coming through, or previously coming through, that are pretty beneficial for gold downside, or negative for gold, however you want to put it. So yeah, that's why I'm still in gold shorts. But again, on a fundamental aspect, on just the hard data that the edge finder is showing, it's not looking too great. So if we actually do go back to the edge finder, we isolate gold. Let's have a look at what the score is at the moment here. So it's only 2, which is interesting. Tiger, hello, good to see you, my friend. King, good morning to you as well. Broke Degens. Yeah, not Nick, unfortunately. Sorry. Good afternoon. First time joining you guys. Edward, welcome, welcome. Hope you have a good stay. We are on for quite a while today. We've got a good lineup of guests, as I said earlier. I'm not going to go through them all again. But we are on slightly later on today's stream than we normally would be. So with gold, what we have seen is obviously the pretty strong gold bearish reading that we've had over recent periods when we had the very strong US dollar. However, over time, gold has started to drop off, and it's now actually sitting positive for the first time in quite some time. So basically since the start of June, we're actually getting this positive score of 2. So the jobs market is still bearish. Inflation is still bearish. However, economic growth, institutional positioning or activity, and technicals are flipping bullish. I'm not actually 100% sure how the edge finder, I'm not reading all that. I'm not sure how the edge finder finds its technical bias. In my opinion, for the way I analyze the markets, gold is still technically bearish. However, the week-on-week change has flipped again to bullish, which I think is what has largely driven gold's upside score, as well as obviously the weaker data we had last week. So there are those things, but again, I'm still happy to stay short because I think the geopolitical landscape is still warranting it. Trump speaking soon, is he? I've got no idea. We'll pay attention. I'm not sure what time that would be. If you're not in a trade, it is wise to stay out today until after FOMC. Yes, absolutely. That's a good decision. So there is no reason to take trades right before, because you are obviously at quite high risk of getting stopped out on volatility. I would expect the Fed to take a slightly more lenient turn in terms of not being quite as hawkish. On the last time we had the FOMC, we saw the dollar rally quite significantly on the hawkish Fed, or what the market took as hawkish. Since that point, we have obviously seen again that weaker US data. We've had people come out saying that they don't really see rate hikes as the best option right now. So I wouldn't expect the Fed to take a super hawkish stance like they did last time. And I wouldn't expect the market to react like that unless we do actually get a very hawkish statement, which I don't think we do, or a very hawkish FOMC, which I don't think we will do. So with that said, in terms of the dollar itself, I think fundamentally it is pressured. I don't think there's any denying that. But again, with the geopolitical headlines we'll be getting in, the dollar is supported on risk-off flows and war premium. So I wouldn't be looking to really do anything with the dollar at this point. As again, I'm already short gold, so I'm not going to start modifying and changing that position. But going forwards, as it is right now, I've got no interest in taking dollar positions. My Nikkei trade. Actually, I personally was stopped out of this trade. However, it is technically still open. I made a bit of a boo-boo, bit of a mistake here. I had my stop a little bit too tight, so I was stopped out around here. The actual stop was here, though. So anyone that followed the same trade should actually still be in it technically. But yeah, Nikkei was absolutely hammered over the past sort of 48 hours. Which is fine. Euro Swiss, I'm actually long. This was a position sent out by one of my traders ages ago, like a couple of weeks ago, well, maybe 1 to 2 weeks ago at this point. I closed it for about break even. I decided to get back into it just to catch up on a little bit of the carry, just hold that position. And the Aussie New Zealand decided to take a little bit of a long position. Again, it's not my trade, so I won't go into that one too much because it's not based on really what we typically discuss here. And I also don't want to speak on behalf of someone else. So Edge Finder, let's just catch up on the chart and then we'll go over some trade ideas for this week. What's going on with oil? It's a good question. Let's take a quick look at oil. What is going on? I know earlier crude and Brent were up. They are still actually getting quite a strong bid. So what I was saying in my YouTube video this morning, it wouldn't surprise me if this is a very good reason now for crude to come up to around 86, 84 and correct the gap that we had on the de-escalation back on, what was this, the 14th? Oh, the 12th of June. So I think, to be honest, oil upside is actually, I don't want to say guaranteed. That's obviously never the right thing to say in the markets. But I think as long as we don't get de-escalations from this point, I think oil is going to continue to catch a bit of a bid. In terms of stopping points, it really depends. Again, I don't want to sit here and say I think oil is going to 90 or it's going to 100 because anything could happen between now and then. If nothing changes and we get, just constant either escalations or nothing really changes, I think base case in that situation is oil basically remains range bound in between sort of, let's say 88 and 75, sort of this range. Or obviously it continues higher towards 100 and then surpasses there. But in terms of, short-term speculative positions on oil, I'm not getting involved. It's the rules that I've had basically since the start of this Iran situation. I'm not going to trade headlines. So I'm not going to start placing positions on oil because of, Trump said something or the US has done something or Iran has done something, because for swing traders, that just never really works out well. Because if you're going to trade headlines, you really have to take a scalping approach and you have to be there almost immediately. Obviously, it really depends on the severity. Something like COVID, when you get the headline that's starting, obviously you could still swing trade that down. But hopefully you get what I'm saying. When it's about war, especially with Trump and Iran, it could reverse very quickly. I've got no interest in trying to trade that situation. So I'm sat out of oil. Anyway, again, let's have a look at some trade ideas. They open gold longs too early. 3,500 area should be easy. Yeah, that's where I'm looking at. So we keep going back and forwards. I keep going to the Edge Finder to look at trade ideas. Now we're going back to the charts. So I do apologize, flicking in between topics here. But yes, for gold, I would expect 3,500 from here. I don't really see any stopping point. I would expect really the next real level of support to be around 3,700. Well, hold on, that's not 37. Sorry, 3,900-ish. And this is basically, the previous low and obviously this low over here, like the weekly, daily support level. But once or if this level is broken, there is no left side sort of supports or anything to come into play until around 3,500. Excuse me. And even that might be a little bit short-sighted. The 3,500 lines up quite nicely with the previous wick over here, but then there is potential 3,400, 3,300, so on and so on. But again, we're back in I'm personally back in a very difficult position trying to give you these ideas because, again, anything could happen between now and tomorrow or next week. So we'll just have to see. Trump's about speaking at NATO summit, indeed. I've got a newswire open, but yeah, nothing really going through here. Iran Press TV citing informed sources: Iran will close the Strait of Hormuz in event of any fresh attacks on Iran. So, you know, still getting headlines coming through. The problem with Trump is that it's easy to wait. Hold on. The problem with Trump is that it's difficult to take whatever he says these days seriously, because it normally changes. That's, yeah, very true. It is quite hard to be a macro trader, or even just a swing trader. Even if you don't trade macro and fundamentals and headlines and things, it's still very difficult. Ray, hello, good to see you. Hope you're well. Bro, I took Nikkei from the last point of liquidity on the left with my SL on the swing low. Well, I would assume you're underwater with me then, or maybe not actually. I know it had a little bit of a resurgence, but I don't expect this to be. I'm fully expecting stops to be hit here. Yeah, I just think we're seeing too much risk off flow today. I might be early to what? Yeah, I'm good, thank you, Ray. Feel nice and refreshed. Actually, no, I don't feel refreshed at all. I feel slightly hungover. James model closed Visa long from 295 to 360. That sounds like a fantastic return. Well done, Ray. What's my view on silver? FOMC, you are right, actually. I don't know. I was kind of repeating what I saw in the chat without actually thinking. Let me see when FOMC is. Actually, you know what? It's going to take. I'll have a look at FOMC in a second. You are right, though. It might have been NATO I was getting confused with. So silver. Yeah, I think silver and gold are kind of the same thing. Gold buy or sell. It depends what your strategy says. I think A1 guys need to have an automatic pop-up when someone says, do we buy? Should we sell? What do we do? Signal, please. We need to have an automatic pop-up that says, what does your strategy tell you to do? But yeah, no, in seriousness, gold and silver, I am very confident they are bearish right now. There's not a doubt in my mind. You know, if there was a doubt, I wouldn't be short. So I think realistically, it's too late to sell. We're currently seeing the pricing in of the headlines we've been getting today. So I wouldn't be looking to trade these markets right now, long or short. I think long positions don't really have any footing, and I think short positions, you're a little bit late. So in this case, what I would be looking at, if you're not already in short positions, and again, this isn't a signal, things can change, do your own due diligence as always, but I would need to draw the fib from the new high that we've just printed to wherever the next lower low will be. So I'd need to also see these lows get cleared out with a new low printed, then a pull back into the fib, and then some sort of rejection to indicate continued downtrend. Now, the downside to this is, again, as I mentioned earlier, the Edge Finder has completely lost gold and silver. In fact, all of the dollar pairs, apart from dollar CAD, have disappeared. Oh, and dollar Swiss, sorry. But yeah, gold and silver no longer getting bearish readings. So on a fundamental side, not really that interested. So I think as soon as we start seeing, again, sort of de-escalations, I'll look to just take profits. I am break even, by the way, on gold. So if anything does happen while I'm away, it's fine, no problem. Make it no win, no loss. Why is 163 price marked on dollar yen considering, why is 163 price mark on USD JPY considered no fly zone? It's because, well, actually not necessarily because there isn't a strict no fly zone, although it's a good way of saying that. I've never heard that terminology in the markets, but I like it. I might start using that. So the problem is with dollar yen, the markets are or were really expecting interventions around 160 to 161. You know, even I was actually short at one point around 160, expecting that. And I think a few other guests were that you'll see on the stream. That never happened. So that was one problem. And then we got, we hit, what was this, just below 163. We had really bad data for the US come out here. I think this was when NFP undershot and we had some other relatively weaker data come out. So this was a bit of a sell-off and repricing within the dollar. We were pricing in the hawkish Fed. Worst data comes out, a bit of repricing going on there. But since then, there isn't really a hard ceiling on dollar yen by any means. But I think, again, excuse me, the markets are cautious of the intervention risk at the moment because dollar yen is climbing higher and higher. The more that happens, the more uncomfortable it is for Japan. So it is expected we'll get an intervention at some point. But again, when will that happen, and how severe will that be? Will it be more of a micro intervention where it's just constant interventions on a micro level that just sort of slow down price, or is it going to be a larger one on a daily time frame where we see something like this back down to the daily 200 moving average? I think that both situations are possible. I'm not really in a position to say which one and when, because no one knows. And this is one of the reasons why I don't really like to trade the yen. Okay, what's been said here? It's like walking into the bookies and asking what horse. yeah, kind of. Although, to be fair, there are people that bet on horses that are quite knowledgeable. They'll study the jockeys, the horses, all sorts of stuff. I mean, I don't really know anything about it, but I know there is some professional level you can do those things. I'm pinching myself for closing silver shorts. Yeah, don't worry. Again, I don't want to sit here and act like I'm a great trader for still being short. It's lucky. It's one of these rare situations where I think luck is actually part of it. The word luck in trading, you should never really use it. But because I was away, it just so happened to be the situation. I am still there. So I'm doing quite well. But again, it wasn't really an active choice for me to just not close it, because my rule set really in hindsight did tell me to close silver. What do you think about dollar? Oh, sorry, not dollar, pound dollar. So, pound dollar is tricky. So I don't really have a view on the dollar right now. I would say the dollar is relatively neutral. So what we can do to sort of proxy that is look at what the edge finder is saying and isn't saying. So we can see the US dollar is slightly bullish with, slightly bearish, my bad, with US dollar CAD bearish and US dollar Swiss bearish. And we've got the pound, so pound New Zealand, pound yen, pound Australian are bullish. So you can sort of use that as a proxy to say pound dollar could catch a bit of upside. But then actually, you know what we can do? We can simplify that massively and actually just search for GPUSD, which gets in a score of 4. So typically, I stay away from anything less than 6 really on the edge finder. So 4 really isn't great, but it is still a bit of an upside lean or bullish lean, I should say. So let's see. Technicals on the daily are horrible. This is just a really range-bound market on the daily time frame. So there's nothing I can really do there. The H4 actually starting to establish a bullish trend. You know, we've cleared out the previous highs. We've now, now reclaimed this 200 moving average, using it as a dynamic support. So I think what I would need to see is the edge finder flip bullish, like actually bullish. So get a score of 5 or above, ideally 6. See these moving averages cross and confirm the trend has changed. Then I could potentially look to be a buyer on pound dollar. So that's kind of all I've got. Other than that, I can't give you much because, again, the daily is just sideways and the edge finder is only 4. So there's not a huge deal I can work with. Do I think gold will crash or go bullish awaiting FOMC? I don't think there's going to be a specific direction before FOMC. Can you watch dollar Swiss? Yeah, we can have a look at dollar Swiss. So did the edge finder say bearish on dollar Swiss? Let's just double check. I need to remind myself. Yes, so dollar Swiss bearish with -7. Now, the interesting thing is I actually quite like this to go short. And it's not really on a technical level because, to be fair, the technicals here are actually telling me to buy. You know, we've just crossed on the daily moving averages, again, indicating that we've changed trends. We've retested the previous daily high here as support. So the daily does look really bullish. And the H4 also looks really bullish. Now, the other side we could take is sort of a mean reversion sort of aspect here. So dollar Swiss, just like a lot of the other Swiss pairs, overall is a very bearish market. You know, on the weekly time frame, the monthly, and obviously the daily, typically speaking, are all very bearish. Excuse me. So there is an idea actually of looking for short positions, but then where would we get into this market? So maybe we could look on the daily here, but again, it's tricky because my strategy is saying to go long on the technical side. So it would have to be more of a counter trend type of approach. So tight stop, maybe something like this, just above the daily highs on the left. And then a take profit could be just a trailing stop loss rather than having a hard take profit. On the sort of addition of the short idea is we've got a couple of banks that are short dollar Swiss. I think there was I can't remember who. I know Credit Agricole was short, and there was, I think, one other one that was going short based on basically just a mean reversion, sort of fair value approach, saying that dollar Swiss and euro dollar, pound dollar, all the dollar pairs have either rallied or sank recently, have basically become undervalued or overvalued. So dollar Swiss, for example, was getting an overvalued rating here by Credit Agricole. So there is that sort of bank side as well that I think maybe we could sort of play on, but it's not a huge deal for me. James, Samsung crash earning increased revenue by 1,800%. Stock still down 6 to 8%. Why is that? I don't really know anything about stocks. I'm not sure why you would have such a large earnings and such a poor stock performance. I would assume something else is going on there. The Korean stock market's down 5%. Yeah, it's funny. I was looking to get into the Korean stock market not too long ago. I just could not get in. There was no. I've got Interactive Brokers. I went on Blueberry. I went on IG. I went on everywhere I could possibly think of. Nowhere would let me trade it. There wasn't a single place, which was really frustrating. But yeah, one of those unfortunate things. I closed dollar card short early, waiting to see if we can enter a long. Interesting. Why are you looking to go long? James, Trump speech affect gold? I wouldn't expect so, no. But again, it's Trump. He could say anything, but I wouldn't expect so. What do you think of realistic timelines past the prop firm challenge? Honestly, my friend, that's a very vague question. I've seen people do prop firms in a day. People will just full margin the whole thing because they have bankroll to buy multiple challenges, and the only goal is to maximize the ROI. In that case, yeah, maybe 1 to 2 days, fine. I wouldn't recommend that though, especially for traders that don't have a large bankroll or don't already have funded accounts to prop up their expenses. So if you're just doing one prop firm, say, let's call it a normal approach, maybe a month, 2 months. It really depends. I've got one guy that took 8 months to pass a 500K account using the Edge Finder, by the way. He earns a lot of money off that. He takes it very slow, very steady, and just DCAs into the market. It's crazy. But yeah, it took him 8 months to get funded on 500K. So don't put a time limit on it. It's more a case of taking it slowly and making sure you actually do it properly. Do I trade FOMC? No, I don't. I'm not a news trader. Where's Nick? I don't want to listen to this dreadhead. Okay, fair enough. Well, as I said earlier, Nick will be on later. So because we're doing a later stream, so I'm on now to open the show. And then we've got Tiger, then we've got Alan, then Marco, then Chris, and Nick. So we're doing a bit of a reverse order today. But yeah, if you don't like my commentary, that's completely fine. You can come back later when there is someone else on. Gold is already diving. Yes, gold is having a pretty good, well, I'm going to say good time for me. Pretty bad time, actually, though. So actually just reached 1 hour, which is really nice. So I'm happy to just hold this position. I will very likely trail stops again once we start reaching the previous lows around 39.50-ish, just to lock in profit and make sure it doesn't reverse on me overnight. James, my guy, been living... loving how hard you're going on your channel. Thank you very much, Josh. I'm trying to do a video every 1 to 2 days. But the problem is I'm like plateaued at like 400 to 500 views. It's a bit frustrating, but I'm actually really enjoying making the videos. So as long as people appreciate them, that's good. Can you look at New Zealand dollar? Yes, for sure. Just give me a second. 500K account, which prop firm? E8, I think. I don't know. I don't want to recommend prop firms. I know there are prop firms that do sponsor the A1 channel and TraderNick. So I think Ola Prime is also a really good option. But I'm not overly knowledgeable in prop firms, so I don't want to give any recommendations because I don't want to get information wrong and mislead people. But I know that Ola Prime is good in terms of like payouts and sort of, legal side and professional side are fine. No, love you, James. Good to see you. Thank you very much, Jeremy. It's all right. I heard a saying once that, you could be the best color of blue, but if someone doesn't like blue and they like green, there's nothing you can do to change that. Why am I not in the A1 Discord? Because I have my own company. I love Nick, love the A1 guys, fully support everything I do, but we have very similar companies, but obviously different companies. So that's why. If anything ever changes, though, don't worry. I'll get a job application to Nick. Forgive me, James, my screen protection is a bit thick, ever so slightly, maybe misclick. It's all right, Josh. I've got no idea what you're talking about, but that's good. Amigos, where's gold heading? 3,700. I really do think gold's going to 3,500, but we'll see. We'll see. What was it? Oh, New Zealand dollar. My apologies. I did say we'd do that one, and I haven't done it yet, so we'll get to that one now. Where is it? It's right here. So it depends. Where do you lean? And actually, this is a good opportunity. Let me quickly go to the Fed Watch tool and see what's been saying here, or what's going on. So we are seeing increasing rate hike likelihood. So we can see a month ago we had an 83% probability of a rate hold. That has now decreased to 65.3%. There's now a 34.7% probability that we have a rate hike in July. I don't think that's going to happen. I think we are going to get a hold in July. However, going forwards after July, I do think we are in for at least one rate hike by the end of the year. Maybe, again, things change, could be wrong, but that's just my opinion as of right now. We can see same thing reflected basically through into 2027. So in September, we've got a 50% chance of a 25 basis point hike. So, excuse me, under 31.6% chance of a rate hold. So I think, yeah, we're pretty much set really that the Fed, or at least the markets, are expecting the Fed to hike rates. So a little bit of a bid on the US dollar from that. And obviously we do have, again, that war premium coming in off the recent headlines. The New Zealand dollar, though, I actually don't really have an opinion. I really don't have a directional bias on the New Zealand dollar. So while the US dollar has fallen off the edge finder again, as I'll show you here, let's go to asset scorecard. And let's find the US dollar here. So the US dollar was really bullish. You can see it right here, pretty much at the most it could be. And now it's just been dropping off again. We've had weaker data. It's just not what it was. But given the current circumstance, I wouldn't mind being long dollar against the New Zealand dollar. So in terms of trading it, what could we look for? To be honest, I wouldn't actually mind going short at the market right here. Something very similar to this. I'm not going to do it because I've got no entry criteria. Obviously, if anyone knows the way I trade, fib from the high to the low, we don't really have, actually kind of missed it here, but we don't really have a fib pullback. It's just not reached it. So ideally, I would have been short somewhere like this. So unfortunately, I don't have an entry, but I quite like the idea of this, but obviously you need to layer on your own strategy behind that. So I think short positions are kind of where I would default to, but again, it's not fundamentally backed really at all. Do I have a free Discord? Do I have a free Discord? No, I don't. I used to, but no, not anymore. I've closed off the free Discord. There's just too many messages. We get people in spamming certain websites and scams and all sorts of. It just wasn't worth my time. I had other things to do than monitor people that are trying to scam my community. Can you look at silver? We did look at silver. If I've got time left in a minute or two, we can do. By the way, I had a good birthday. I did, thank you. Yes, it was very relaxing. Just went out for some food, some drinks. And this is the high life of a trader. When you guys make it, you might be able to go to the cinema and watch Toy Story 5. So yeah, that was my birthday. But yeah, got out of the house and yeah, just took a break from the charts, which was nice, and a break from work. RBNZ, not that hawkish. Weak, yeah, exactly. That's what I mean. There's just not really much for me to trade with the New Zealand dollar specifically. Could we check out NAS or the S&P? For sure, yeah. So these markets, I think, are obviously very pressured at the moment. Technically speaking, they're still bullish. We've still got a really nice uptrend here with the moving averages. Obviously, actually, wait, hold on. Let me use the Nasdaq instead of the Dow. So something I'm looking at right now on the Nasdaq, as you can see, I've already got marked up actually, is a break below this sort of support level, and then a retest, and then a continuation to the downside. That's not just on sort of the Iran situation. It's also based on my opinions that the markets are, or stocks, I should say, companies are very overvalued. I think that's kind of well known. Again, I'm not a stock trader, so as my knowledge on that type of thing is a bit limited. But I just get a very uncomfortable feeling that we've been range bound for so long. We've had such a large rally to the upside. We are seeing risk off flows. Stocks are overvalued. I do see a little bit of downside potential. So I'm quite happy to go short. I wouldn't really have a take profit. It'd be more just a trailing stop, see where the market goes. If it doesn't work, it doesn't work. I don't think we've got anything on the Edge Finder for these markets either. Let me just double check. Well, actually, the FTSE's bullish, the Dow is bullish, China 50 is bullish, but no, nothing for Nasdaq and the S&P. Euro Aussie, Gap knows profitable enough to go to the cinema. Very true. Yeah, very true. You need millions and millions of dollars. So Euro Aussie, okay, good option. Do I have anything for Euro Aussie? I don't think so. I know the ECB did an insurance hike, just a one-off hike. I'm not expecting them to do another hike, especially in the next meeting or next couple of meetings. The Australian dollar, however, again, I don't really have anything. The RBA did 3 rate hikes. They're back now on pause. So I think the Australian dollar has a little bit of ground to give up. We saw a massive dominance with the Australian dollar earlier in the year. I do think there is a little bit of a mean reversion due. So yes, a long position, I think, based on just that would be fine. However, again, there's nothing on the Edge Finder to back up that idea, but the technicals on the H4 have flipped bullish. Excuse me. We've repeatedly failed to break below this sort of daily and weekly support level. And again, I do think we have a little bit of a sort of mean reversion idea to go long, but it's not strong enough for me to do anything. So I'm not taking this trade, but maybe there's some ideas for some of you that have different strategies and approaches. Model took UK 100 long last month, still holding. Very nice. Unfortunately, I missed my UK 100 long, but I'm not sure if it's still valid. No, it's not. So I was previously looking at this long here, somewhere around this sort of area around there. Didn't take it because the market was just sideways. I didn't want to buy into a sideways market at the time. Then I was looking to get long here on the previous highs, on break and retest. That didn't happen. So now there's nothing for me to do because we've broken below the fib. So I'm just sat out of this market for now. Anyway, ladies and gentlemen, it's time for me to head off. It's the end of my segment. We now have Tiger coming to take over the show. Guys, have a fantastic rest of your days. I'll see you all tomorrow. Stay safe and don't get margin called.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Tiger here, on for the next segment. Hope you're doing well out there. It's obviously FOMC Minutes Day, which Nick will definitely cover here a little bit later on, more in depth. So stick around for that for sure. Yeah, we did kind of flip the show around a little bit, but this is still pretty much my normal slot. I normally end the day, but now I'm pretty close to beginning it. So anyway, guys, let me know in the chat there if you have any specific tickers or anything that you are watching. Just kind of a recap. Obviously, you guys have probably seen the news. Looks like President Trump wasn't too happy sitting there with Mark Rutte, however you say his last name earlier, the NATO secretary. And it sounds like the ceasefire, the MOU may be going the way of the dodo bird, but not 100% certain just yet. But hey, at the end of the day, we got to kind of listen to what he says. So obviously, little bit of a risk off vibe as a result of that. Oil obviously spiking, indices coming down a little bit, oil or gold, silver as well. So yeah, that's kind of where we said. It sounds like he said that Jared Kushner and Steve Witkoff can continue to negotiate, but he doesn't have a whole lot of faith. So yeah, definitely not the kind of news we want to wake up to this morning over here in the States anyway, the evening over there for you guys across the pond. But hey, that's the hand we're dealt with. We've already lived through it for over a couple months, 3 months at this point. So we're back to where we were a few weeks ago, aren't we? So anyway, we'll see how that all pans out. But anyway, guys, we'll take a look at some Edge Finder setups. We'll take a look at oil, gold, a few other items on here I know you guys are interested in. So with oil, just to kind of lead off with that, it's obviously this thing's been in a strong downtrend for a while. Obviously, because of the MOU understanding there. But as you can see, we are starting to get a little bit of a lift up the last couple of days or so. It's real close to being a bearish setup over here on Edge Finder. It's just not quite there yet. If we go down here to the oil right here, you can see that we've got a decent picture on the fundamentals and the sentiment side of things. It's just the technicals that are holding us up in light of this, last couple of days of just upward spike. So I don't know. We did kind of bounce into a supply zone right here. It's a 4-hour zone I was keeping an eye on. Not the strongest of gaps coming out of it, but the volume did pick up a little bit. I'm absolutely not interested in trying to short this right now, especially because oil is getting pumped because of this rhetoric. I guess we could call it rhetoric at this point. But it's something I'm interested to keep an eye on. I told you guys for a while now, I was kind of keeping an eye on this pre-war daily demand zone that we had over here after closing that gap. We didn't quite touch it, but we got close. Now we hit the equivalents on the Brent crude side of things, the equivalent zone. We just haven't done it yet on WTI. So that's really, that's part of the reason I would even entertain looking at some shorts down here. But again, absolutely not right now. Going to have to let it calm down. If somehow Edge Finder does get a signal back on here, I'm going to have to see a new series of lower lows on here, especially after this 2-day push up that we've had. So absolutely going to ignore this supply zone for now and just wait for some more price action to kind of do its thing. So that's kind of my look on oil over there. Flipping on to gold. Just like the indices, it's just giving us a nice steady drop. Okay, the opposite of oil. So we did bounce into that supply zone confluence I was telling you guys about the last couple weeks or so. We did get a little bit of a push down. I didn't take it, however, because of the lack of volume, the lack of effort, match and result. It did in fact get a push down, but it didn't abide by my personal rules, so I stayed out of it. We did kind of come close, and for a minute, while gold was still technically on the bearish side of things yesterday on the top setups, I was considering this as a second chance opportunity. Here, let me just go to one chart view. As a second chance opportunity, I found this smaller zone at the top, and we whipped and we got close to it, but we just didn't quite hit it, and that's where it kind of rolled back over to the downside. So no big deal. And yeah, it's obviously off the list today. Taking a look at gold, silver, they've actually pumped up pretty high. So -1 on silver there, neutral, and then gold is all the way at a +2. So that's quite the turnaround for gold. But it's still technically neutral. If need a few more points to make it bullish, need a lot more points negative if it goes back to bearish. So it's totally off my list right now and just going to pretty well skip it. So let me take a look over here at the chat. Gold. Okay. Yeah. S&P. Yeah. We'll take a look at the, yeah. Oh yeah. Appreciate it, human. Yeah. We'll take a look at S&P. What else we got up here? Yeah. Yeah. I see you mentioning FOMC minutes there. Yeah, guys, that's a big deal when that comes out, the FOMC minutes, because obviously, what's his name? Kevin Warsh made his speech 3 weeks ago. So we always want to look at the minutes to see what text is different. There's usually always little nuggets we can draw out of that. And that's what I think Nick's going to be really good about explaining probably a little better than me. But the point is, hey, what's changed since the text that came out of his mouth on his rookie speech for Fed chair? Okay, so it's going to be interesting to see. He'll probably talk about his task forces, because there is a task force for that. He did remind us about 8 or 9 times in that speech, as well as the forum they had in Portugal last week. So interesting stuff, kind of funny, kind of entertaining. But yeah, stick around for more of that whenever Nick comes on here a little bit later. What's on our list? Well, CAD yen is at the top of the list, guys. Canada is the second strongest currency when it comes to fundamentals, just the fundamentals. And then the yen is still at the top. So I do wish the yen wasn't so dang strong, but hey, it is what it is. If we go over here to the where's my goodies at? The surprise index, we'll just take a quick look at the currency strength. And I lied to you. Canada actually pushed to the top. So I guess the yen is now tied with the Swissy for the second and third spot. So there we go. And it's like I've said before, guys, if I can avoid it, I try to avoid it. Trading two currencies that have the same strength level, whether they're both strong like this or whether they're both weak down here at the bottom. I prefer if I can buy a strong currency, sell a weak one. And we have slim pickings right now. The Aussie dollar is really, as far as the 8 majors, it's really the only major one that's given us a weak signal. Again, this is just the fundamentals, but it's the why to get into trading. It's the hard data. This avoids rhetoric. This avoids news pieces where they're trying to get clicks. Right? So that's why I always like to personally lead off with the fundamentals, just to see what's strong and what's weak. And we're just not really getting a whole lot of separation. In fact, if we look at the top setups, do we even have Aussie on here? Okay, we do. So we have Aussie Swiss. So that right there would be a good combination for me personally. Swiss obviously being an 83% beat rate. So ignoring the neutral items, the ones that make that hit expectations on the nose, because it's priced in, right? It's kind of a wash. It cancels itself out. All we care about is how many beats did we have on that currency, how many misses. And right now, the Swissy is giving us a lot of beats. And you see the Aussie down here at the bottom. So if we're just looking at it from a fundamentals perspective, well, that's my favorite one right there. Because all the other combinations of currencies are, mainly strong currencies. Okay? Outside of the Kiwi, which is pretty well in the middle, but pretty close. So as far as Aussie Swiss goes, just interested to see what kind of a setup we have over here. Let's go take a look. Okay. As always, guys, you know me, I start with the daily on the right, make sure my lower lows and lower highs in this example is intact. The one red flag, and I think I mentioned this the other day, we have already bounced into that 4-hour zone of demand at the bottom. Okay. So that's kind of the only, I don't want to say red flag. It prevents me personally from wanting to put in a full risk. Okay. We're talking about this zone of demand that we bounced into over here where we broke structures. So it's just one thing that's in the back of my mind if I'm considering shorting. Now, the one saving grace is the fact this is actually the second time it's been touched. So it was already mitigated when it touched it here. You tell me, did this 4-hour zone, did it really look that strong if this was all the further up it was able to push it before it returned? Doesn't look very strong to me. And the context is we're in a downtrend. In fact, I got my 8 EMA below my 21 EMA, that mechanical look I like to see. Again, I've said this before, the Swiss franc pairs have a lot of wicks. So these are definitely some, in my opinion, for me anyway, some of the tougher currency pairs to trade. Because it's just not like a euro dollar or a dollar yen, right? Where it's nice, smooth price action. It's herky-jerky. It's a challenge. So when it comes to these types of pairs, it absolutely has to be meeting every single rule I have. Now, the further up daily supply is a long ways away. It's up there quite a ways. If we look over here on the left, on the more actionable time frame, we could find a smaller time frame zone in this area, but it's just too congested, guys. That's, to me, 2.5 days of equilibrium or fair market value. I don't want any part of that. So yeah, I would still probably just have to wait and see what we have coming up here at the top. Do we even have a 4-hour confluence? And it looks like we do. Okay. So there is a 4-hour confluence. Now it is the top of the range or the top of the swing high. It's probably too many candles in that consolidation for my personal taste, but it's about the best thing we have. So this even though it's at the higher end of the curve analysis I show you guys, probably not going to put in a full risk on this either. Maybe just kind of limp in. Just kind of limp in. And that'll give it plenty of time for this zone to, if it's going to push it up, give it plenty of time to do that. But that is obviously the swing high. That's the top of the curve. That's the premium area, the expensive area. That's where I want to be shorting. So nothing to do right now. We'll get up here. If somehow price does rise up there, we'll see if we can get a bearish engulfing candle, a candle with a wick on the top, otherwise known as a shooting star. And we'll look at some more rules at that point. So yes, that is my personal favorite when it comes to the fundamental match, but even so, it's still kind of ugly. Pretty ugly. I almost want to see it just break through the rest of this demand and kind of, form some different supply zones a little bit lower, but that's just my call. Take a look and see what you guys got over here. Oh yeah, S&P. One opportunity asked for S&P, and then CAD yen by Thomas. Yeah, let's do S&P. Go check that out. Now, I was just looking on the put to call ratio just a minute ago for the indices, and I think the only one that I saw that was interesting was probably I think it was the Dow. When it comes to the Dow, guys, if we're just looking at where liquidity possibly is, there's high put volume. So that's a lot of bearish bets going on right now in the options market for the Dow. So this one, as far as using it as a contrarian signal, would probably be the top one. Now the Dow, if you guys have been paying attention, I know this thing's just continued creating higher highs and higher lows, right? S&P though, which is the one that you asked about, is pretty much in the middle. So it's just a little, it's equilibrium. It's that fair market value I talk about. We'll still take a look at it on the chart in a second, but might as well finish it out with the Nasdaq since I'm here. And it's going to be, I do believe, in the middle as well. Yeah. So there you go. So just a little bit on the equilibrium side of things. Russell, might as well finish out Russell. It's actually closer to higher call volume. So there's a little bit of split. You got one that's mostly bullish. You got one that's mostly bearish. Talking about the indices here. And then you got two that's kind of in the middle. So anyway, just wanted to point that out first before we come over here and take a look and see where we're actually at as far as top setups. We are obviously in neutral for the indices at the moment. The DAX was giving us a bullish signal yesterday. It's all the way down to 1. As far as S&P, it's a -1. So it's actually more bearish when it comes to the fundamentals right now. Remember, the dollar has missed out on quite a few reports over the last, 9-10 days? And what was 100% beat rate is all the way down to 60 for the currency. And I think only 50% for the stock side of things. So again, it's pretty well neutral. But that's where we stand with that. We did have our newest COT report come out finally after hours yesterday. I think they were a day later. And it was a little, it's a little bit bearish on that front. But obviously the technicals guys on the indices are still giving us bullish scoring because they've just been going to the moon and Saturn and everywhere else. S&P and Nasdaq pretty well sideways the last few weeks. Dow is the one that's pretty well going to Saturn. But as far as S&P goes, this is why. It's just very congestion-y. We're basically in the center of this gigantic multi-week fair market value. I mean, that's basically what it is. The move, I think, on S&P was already made, and that was back here on the 25th. Okay, so close to the end of June. We've now pushed up to the higher end of the curve. And right now we're right in the center. So we're pretty much in a retail chop zone. I think there's probably going to be other assets better to trade than that, even better indices. Guys, I'm watching UK 100. We'll get to that in a second. But the Dow, which again, they've all fallen off to neutral. But, whenever President Trump had his press conference, again, you saw all the indices crumble. You saw gold crumble. You saw oil skyrocket. And when things like that happen, the geopolitics, it doesn't give a you-know-what about my demand zone, which I was keeping an eye on right here. So I know I've talked about this zone all the way down here for the past 3 weeks or so. It's probably going to, at this point, because we are getting this rhetoric coming in, it's not going to shock or surprise me at all to get a big retracement all the way down to that zone that I talked about 3 weeks ago, the 50,400 level. So that's personally what I'm interested to see. And that's if Edgefinder can turn around and give us some type of bullish signal. But again, with the dollar, with the U.S. data deteriorating. A couple labor data sets, the PMI sets, both of them. It's just kind of, hey, look, the dollar isn't king dingling like it was a week and a half ago. So we're just pretty much kind of reevaluating everything. In fact, we had dollar Swiss on the sell side. Okay, if we go back to the top setups, I don't think it's there now. It was yesterday. But yeah, the Dow, the one I just talked about, is still just barely tall enough to ride the roller coaster. So for me, though, it's not it's not a plus 10, it's not a plus 12, it's a plus 5. It's just barely tall enough. So I'm going to have that deeper retracement all the way down to this level down here. So we'll just go ahead and kind of redraw this up. Okay. This is more what I'm interested in. And you can see it's got a long ways to go. I don't like any of these zones here. You had one zone here that already got touched and pushed up. You have a tinier one here, which is not even worth showing because it's too far away at this point. I don't think it's got a shot in HE double hockey sticks to hold this. So yeah, literally that, if you ask me where my favorite place is, it's going to be clear down here, guys. 50,400. We'll see. Geopolitical tracker that Nick added onto the Edge Finder over here. I haven't checked it today, but I guarantee you it's probably going to spike up. There you go. So we're back into the high risk area where it just kind of monitors the geopolitics. Okay. So it's just a very simple graph to look at and say, okay, are President Trump and Iran behaving or are they not? Well, right now, as you can tell, they're not. And this will probably go higher. I don't know how often this updates on Nick's graph, but yeah, we're back to the high risk areas, guys, when it comes to the geopolitics. We like trading on data, but sometimes we have to watch the geopolitics. Whether we like politics or not, doesn't matter. We still have to know what they're saying, the rhetoric, you know, some of their basic values and how they govern, et cetera, to add to the data and not listening so much to all the stupid news, because you guys know that they're all there for an agenda. Doesn't matter which side of the aisle you're on either. It can be full of nonsense at times. So anyway, just kind of getting back to it. CAD yen, very top of the list. That's the one Thomas asked about. So let's go look at that. CAD yen. So CAD yen, bullish plus 12, very, very strong bullish bias. But the challenge is on a daily time frame, it's still technically pointing down. Now, here's the thing. Lower set of lows and highs going all the way throughout here. Lower low here, lower high, lower low. But now we all of a sudden have a higher high. So what do you guys think? If you see a steady series of lower lows and lower highs, and then all of a sudden you have one higher high, do you guys think that changes the trend? Does that turn it into an uptrend? Does that keep it as a downtrend? What changes this? What changes a trend from downtrend to uptrend? Well, in my opinion, this is half of it, but it's not the whole picture. So I basically need a little more information to prove this is turning into an uptrend. So very simply for me, if I'm just looking at the 4-hour side over here on the left, lower low, higher low, or higher high rather. I probably need to see another move. Probably need to see another move down and then a push off from there. Okay. Because we have yet to break the lower lows, right? We've broken the higher high. We just haven't broken the lower lows yet on the daily. Now I'm looking at it from the daily time frame. If you look at this from the 4-hour time frame, the picture looks a little different, right? We got a higher high here, a higher low. So it just depends on the time frame. With this being such a good downtrend that we have for a while, I need to see a higher low on a daily. But that's just me. But if you think that the 4-hour chart over here is enough, if we go down to a 4-hour and look at our 8 and our 21, well, we got the 8 above our 21. We got higher lows and higher highs. We obviously broke structure here. So if we're going from that aspect, all right, let's see what we got over here on the left. I've already drawn up a little bit of a zone there. We'll dig into that in a second. A little deeper down, you can see I do have this zone here. I just didn't fully draw it up. 4-hour, kind of a 4-hour zone of demand right here. Higher time frame, so that means higher confidence. But if you, as you see, we got a smaller one here, which is it's technically let's see here, what did I draw up? So it can be a 1 hour because there is a little bit extra wick there. I think I drew that up on a 30, yeah. So here's a 30. This is the beginning or the last candle right before the London session started, where the London liquidity started popping in. And we had a few nice green candles come out of that. And remember, that was part of what broke this structure over here to the left. So could this, even though it's high on the curve, still technically in a downtrend, because we've yet on a daily to have a new higher low, okay, could this be kind of an aggressive entry? Well, under most circumstances, I would say no. But EdgeFinder's given us a very bullish plus 12. We've had quite the turnaround, a 5-point swing in the last day. CAD, the Canada dollar, is, we just saw, the strongest currency. Yes, the yen is right behind it, but there's no red boxes up here. You got a lot of neutral ratings, but everything that's not neutral is bullish. So possibly, and I'm not telling you what to do, okay? Again, not financial advice. I'm interested to see what happens here. If we get a pull, if we get a drop down here, we get some type of manipulation happening, get a last drop in, that's a possible trade. Okay. We get the momentum comes down, we slow down, because we don't want to just see it just completely blitz through like that, like a hot ticket. I want to see just a tiny bit of basing, maybe some swing highs, some swing lows, liquidity grabs. That's the bank kind of building their position. And then you get one final push down or a spring, for those of you that understand Wyckoff. That could be a possible trade. I think it's aggressive, and it definitely would not be a full position, because 30-minute chart is a noisier chart than what I'm accustomed to at the 4-hour level. So if this makes no sense at all and it just completely shoots through, we got a 4-hour down a little deeper. So I'm going to watch up here. This is a partial position. Down here would probably be probably a little more of a fuller position, but still not like a full position, because the daily has yet to form a higher low. So that's my thoughts on CAD yen. And let's see what else we got over here. Worst just said, let the market run, says Michael Dong. Yeah. Why do we care about the FOMC minutes? Yeah. Look, again, sometimes there can be little nuggets that sound different than what he said. Sometimes it might sound a little more hawkish. Sometimes it might sound a little more dovish. Give us a little more of a risk on, risk off vibe. It'll give us notes on if they're in fact going to factor in a rate hike, like what's been rumored after several months previously of thinking about getting a rate cut. So there's a lot of little nuggets in there, guys, that we can find. So perhaps we'll kind of accumulate that, bring a better story in tomorrow with that. But yeah, it's boring stuff sometimes to watch all this, but when you understand how to read it, it can really help. It can really help out on trades, short term and long term, especially longer term swing trades. So anyway, that's CAD yen. I'm a little hesitant about it until we have a higher low on the daily. Natural gas. Ooh, we don't get asked about natural gas in here. I'll tell you what, real quickly on nat gas, because I do cover it over on my other channel. The thing with nat gas is we're kind of getting that consolidation as well. If we just take a look at this thing on a daily, okay, just sideways congestion. That's why I drew up this blue rectangle. That's more of your fair market value. So I want an extreme zone. I don't want to buy or sell anywhere in this zone. So if I drop down to a 4-hour, about the best I could do right now on nat gas from a technical level would be possibly this zone right here. Pretty much starting at a 3.098 level, where you at least had a 4-hour zone with a gap showing demand heavily exceeded supply. We pushed up, we broke some initial structures, but then that supply zone overhead pushed price back down. So I don't know how strong this is. Again, for me, this would be a partial, but I think the stronger demand would be deeper down, more extreme level, cheaper area, bigger gap, acceleration gap coming out of it. And okay volume leaving, but not the greatest. At least it gave us, a couple strong green candles coming out of it that broke some minor structures, rebased, and then continued up and broke the broke major structure. In fact, the play to be made on nat gas, which is already over with, was this zone right here where it kind of regathered itself and gave us some really strong candles that broke that major structure. That demand right there is basically where we kind of got bounced up in the first place. So, yeah, I don't want to spend too much time on nat gas since we don't really cover that on this channel, but that's about the best I could tell you right now on the nat gas side. Okay. But the basic idea is avoid all this crap right here. This is where buyers and this is where retail traders come to die, guys. This is why I avoid the equilibriums, the fair market values, the retail chop zones, diddling in the middle. You guys hear me say all those terms all the time, right? Go for the more extreme zones. And then obviously the sexiest one would be clear all the way down here, 2 3/4, because we got a daily 4-hour confluence. So that's about best I can do for you on that. Real quickly, and I touched on gold earlier, Matt. If you want to just rewind about 20 minutes. Bitcoin, and then I got to get up out of here. Yeah, diddle in the middle, one opportunity. That's right. Bitcoin obviously giving us a neutral rating. It's nowhere to be found on our bullish bearish. But as far as the chart, this thing is still trying to decide if it wants to continue lower lows, lower highs on a daily. If it wants to turn around, what the hell it's doing. It's pretty well in a week-long sideways saga as well. Kind of like some of these indices, Nasdaq, S&P, what we just looked at on nat gas. A little bit too sideways of a congestion for me after having a downtrend, a drop, which dropped into the remnants of that monthly, weekly, daily demand zone where we did get one bounce already. So the move was technically already made, but we kind of came back in here. My alarm's going off. And then in the second time, it wasn't strong enough, neither the daily nor the weekly. So what I would say on Bitcoin is I'm just interested to see what happens, because inside of this monthly at the very bottom, we do have a brand new, fresh, untouched daily zone of demand. I'm interested to see if it's going to give us a new bounce up, but I don't have any money on it. That's just what I guess you could say I'm projecting it. I'm just not betting any money on it. So that would be my guess. And otherwise, if it cuts through, then c'est la vie. You're going to kiss 50. Maybe that'll bounce, or it's going to 0. Who the hell knows, right? But yeah, I would just say that in closing. I do got to get out of here. Alan's on right after me. I'm interested to see what happens if we drop to that daily demand a little deeper down. So, all right, guys, short and sweet. Hope you learned something today. I'll be back tomorrow. And again, on next, we do have Alan. So take care. Nick to follow shortly thereafter. Peace.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, good evening, good afternoon, everyone, wherever you guys are watching today. Happy FOMC Meeting Minutes Wednesday. Hope you guys are doing good. Hope you guys are doing fantastic. We have a little bit of movement here going on. We got the VIX waking up a little bit, up 12%. It's still below 20, under that 200-day moving average, but nonetheless, it is starting to wake up here a little bit right ahead of the FOMC meeting minutes. Hey, Kier, good to see you again, man. Hope you had a good morning or good afternoon. I forget. I hope you guys are doing fantastic. Nasdaq here getting softer, down 1%. The Dow actually has been one of the ones that has been relatively strong and showing some weakness here today, which is quite interesting. It looks like equities across the board here are red on the day. We'll see if there is some follow through with that after the meeting minutes. We'll be looking for some clues to see if we have anything different that was said in the previous Warsh conference that we had. So we'll see. We have yields here higher for the U.S. The 2-year yield is screaming higher. So is the 30 and the 10, which is interesting. In fact, yesterday, the 10-year was up like what, 1.7, 1.8, I think, if I'm not mistaken. Oh, wow. What? No, whoops. That's a weekly time frame. My bad, guys. Let's see. What was the 10-year yield doing yesterday? It was up 1.8. and today we're up almost 1%. So yeah, it seems like the bond market here ahead of the meeting is pricing in the potential for perhaps some more restrictive policy ahead. Hey, Sluggy, good to see you, man. So yeah, that's kind of what I'm thinking here. We are seeing also too some dollar strength here today. Very marginal, very minimal, but again, nonetheless, it's green on the day. And I think a lot of that has to do with also too. Did I find the culprit? So here's the thing. We recently saw some back and forth in the Middle East, a little bit of a flare up. Um, let's see what happened. What was that? Oh, Trump said it here earlier today. Maybe we'll do some things that could increase the oil price. I think that's a hint to the Middle East stuff. So US and Iran stuff back up in the picture. Things seems like things are escalating there on that front. And that's why we had oil pop yesterday and today up 5%. It's probably why you're seeing the VIX flare up too, and yields. So yields are probably anticipating maybe more conflict in the Middle East. And if there's more conflict, the price of oil goes up. And if there's more oil prices going up, then that's inflationary. So it's beautiful how markets are all connected in one way, shape, or form. So seems like that's what's going on. We'll see if the Fed meeting minutes today confirm if they are, watching inflation like hawk or not. I do expect maybe some commentary about the price of oil, right? So the meeting minutes were within this area here, not including this recent 2 days of oil green days. So maybe they're kind of like hinting at, oil's going down. Maybe that, means that the core prices will go down. Who knows, right? So we're going to be looking for that kind of verbiage. But yeah, very interesting. So yeah, it seems like the Middle East stuff is causing oil to pop. Oil is causing yields to pop. Yields are, causing the dollar to pop, and that trickles into anything against the dollar lower, metals lower. So we have gold here lower, silver lower. So interesting day. Hey Max, how you doing? Yeah, Nas off the clip. Trump probably has like 5,000 oil contracts running. Before GT, I made a funny post here right before I came on. But if you guys don't know, the president has been very active in his trading. The filing came out for his 2025, and he placed about 21,000 trades, or maybe not him particularly, right? Obviously, that's impossible, but his team or his camp, 21,000 trades. And Nancy Pelosi posted about 200 in her entire career. So very, very crazy stuff going on there. But yeah, there's a lot of speculation and rumors about that, but it is what it is. We can't control that. What we can control is the macro. So what I'm looking at here personally is to see, one, if the things that the Middle East start to cool down, maybe that keeps oil some kind of capped here. We are getting at that 200-day moving average. So if you have a solid close above this 200-day, then I think that there's a possibility that we can retest maybe this 85 level. And in fact, you know what? Oil was something that I was interested in buying at these levels. I didn't do so, which kind of sucks at the moment here now. But let's see what the Edge Finder says with oil, because I did want to actually buy some and take it and trade it to that 200-day moving average or above up into that 85 mark. So let's see what oil is doing. Let's just type US oil. It's getting a neutral rating of -3. So not the best read. So maybe the score improves a little bit, and then I can look for a pullback and then get into the trade to the long side. That's a contender. Obviously, we have some follow through in oil and yields and whatnot, and the dollar gets stronger. I will have to repivot out of my dollar Swiss short and then look to go into euro dollar shorts. I like that story. The metal story to the short side looks good as well. So there's a lot of opportunities. Again, we need to see, if there's follow through. We need to see what the meeting minutes look like, and then we need to see what CPI next week does as well. What about gold? Someone asked here, gold will go up or down. I actually know that answer for sure. So here, let me look at gold here. So the actual answer, I figured it out, if gold is going to go up or down right now at the meeting minutes. So what's going to happen is you're going to, see what I did there? I don't know. I just said silence because no one knows what gold is going to do. I hope that was funny. I was thinking about that before I came on the stream, but yeah, gold go up or down? I don't know, man. I really don't know. If I knew the answer, I'd be on a beach right now. But what you can look at here, and this is what I discussed in the workshop, is looking for these levels to break. In fact, I think both can be right, gold up or down, right? You don't know, but here's the thing. Technically speaking, if you were to get a break above this 3,900 level, then you could look for a break and retest and trade it to the downside if you still continue to see higher prices of oil, higher yields, and a stronger dollar. In that scenario, it makes a lot of sense. On the flip side, if you were to get a break above this 4,400 level and you overcome that 200-day moving average, then if you were to see softer yields, oil still lower, and a softer dollar, then that trade makes a lot of sense. So I know I made a joke about knowing the price of gold and what it's going to do, but it's really that simple. I would look for those three things. I would look for the price of oil, U.S. yields, and the dollar to really make a strong directional call. So that's what I would be waiting for. Now, if you were to go ahead and wait for the break and retest in either direction, do you catch the entire move? Absolutely not, right? That is the trade-off. So you can either be early here and try to buy this dip and then trade it to the upside. And if you do overcome this level of resistance, then you make more, right? Because you captured more of the move. But again, the kind of trade-off in that is that you don't know if it's going to happen or not. So either you're early to the trade, you commit to a direction and you let it be, or you just wait for a break or retest in either direction. Do you capture the whole move? No, but at least you have a little bit more conviction in the direction. So that's kind of my thought process there. And I really talked about this in depth in the A1 Trading Workshop, which if you scan the QR code here in the bottom left hand of the screen, you can go ahead and join. It is completely free up until next Friday. So if you are new to fundamental trading, you want to integrate it, or you just want to get the most out of the Edge Finder, or maybe a combination of everything, feel free to go ahead and join. It is completely free until next Friday. In fact, I'll put the link here as well, so you can go ahead and just sign up there on the job forum, and I'll be more than happy to have you. It's been great. It's been very interactive. Lots of great questions there. And we go through everything, right? We go through the fundamentals, the technicals, the sentiment, everything. It is really fantastic. So I would really encourage you, if you are looking to trying to transfer over into fundamentals or just get a little bit more heavy into it, I would encourage that you go ahead and join. Yes, we're laughing at the joke. I'm glad. Before GT says, I just trade lower time frame on gold, made money on sale and buy today. Yeah, man. You can make money. That's the beauty about markets, right? Both could be true, right? A buy or a sell could be true depending on your time horizon, depending on your entry point. Both can be true. Wait for gold market to shift and enter at the latest FVG retest after the MSS. Yeah, man. Yep. Okay, let's look at the dollar here. What it's doing. It's really quiet, man. I think it's going to be quiet too. I think markets will generally be kind of just trading in the direction that they will be until after the meeting minutes. In fact, actually, there's one thing I can talk about that's relatively fresh and isolated, which is the most recent Royal Bank of New Zealand interest rate decision. So there was a rate hike, which was widely expected by analysts. However, the actual verbiage from the meeting minutes were kind of lackluster, I would say. They basically just said that, they're going to be data dependent on the future and things like that. And so you did to get a little bit of a pop in Kiwi dollar. I think it was up about 0.5%, if I'm not mistaken. 0.77%. But it's starting to fade off a little bit. And I think it's widely more, not so much because of Kiwi weakness, but I would say more so because of the dollar strength coming back into the picture. In fact, let's go to the currency strength index chart here, see what's going on. Yeah, so Kiwi popped here, the pink line, and is now kind of retracing back, reverting, which is quite interesting there. And again, Japan, the yen has been getting crushed lately. Let's look at JXY here very shortly. JXY. Yeah, getting absolutely crushed. And if I'm not mistaken, I saw on the Edge Finder too. Everything against the yen is pretty strong. CAD yen getting a bullish reading, pound yen, Swiss yen bullish, which is interesting. Euro yen, Aussie yen. So it's like the yen is very, very weak, which we've obviously been seeing that, which I like to see. In fact, I think if we were to get some kind of a pop in yen, this is the JXY. So I'm looking at this level right here, guys. let's say hypothetically there is an intervention or a rate hike or some kind of force that we can't predict right now that props the yen higher, I'd be looking to buy this dip right here. The 64 on JXY, if we were to somehow to get here, I'm going to put an alert right there, right where that 200-day moving average lives. I would be looking to maybe perhaps not just buy dollar yen, but buy the yen basket as a whole. CAD yen, pound yen, Swiss yen. I would probably buy them as a whole and just trade that to the upside on any meaningful dips. Well, looks like I picked the wrong one. Pound QE started well, then pull back flush higher due to the war escalation. Hey man, that's what it is, man. You know, you can't predict these headlines, especially when it comes to war and conflict. It's been annoying, but yeah, it is what it is. I will say the dollar isn't as strong as I thought it would be. Maybe because it's nothing new, right? We've definitely navigated this environment before where you have positive headlines and then negative headlines. And I think what was happening was just a smaller exchange of missiles, which sounds crazy to say, but a smaller exchange of missiles relative to what we've seen in the past. And maybe that's why we're seeing the DXY not as strong, but yields are definitely showing some strength here. So yeah. And also, the VIX is waking up a little bit. Equities are selling off, but I would have expected more strength in the dollar, which since I am in a dollar Swiss short position, that does make me a little bit happy, I would say. So yeah, that's kind of what I'm looking at here. Marco, how you doing, man?
Hello, I'm doing pretty well. How are you?
Waiting on what's going on. Pound Swiss, Kivu says. Yeah, that's a crazy one. I think I talked about it this morning, but yeah, Pound Swiss is crazy to the upside. Marco, how have you? Well, anything new? I think you traded Kiwi dollar after this recent central bank meeting.
I did trade it through Euro NZD. So
Euro NZD.
I can break down the trade for you quickly here. So
anything unique, Marco, that you caught from the rate statement? I personally didn't see anything crazy. I know they were just did the simple like verbiage of like data dependent, we're looking to react to it if it does show, but nothing as far as like a strong commitment or anything.
I saw that they didn't exclude further hikes. So
okay.
I saw they are thinking about further rate hikes, which of course is considered super hawkish.
Mm-hmm.
This was the play. So took it yesterday, took a long on Euro NZD. You could have done it through pretty much any single currency pair that has the New Zealand dollar. But the bet was you had a bunch of hikes priced in for the RBNZ, which we can see right here. Let's go to interest rates, projections. And let's go to NZD. So a bunch of hikes priced in for the RBNZ. Hikes are kind of not needed. That's at least what my thinking was. Oil was back to pre-war levels. The Middle East was behind us. Trump was staying quiet up until that point. So I thought that the event was going to be more dovish. Maybe that they won't even hike. So forecast was for a rate hike. I thought, well, maybe they don't even hike. But the main bet was on forward guidance. So essentially what moves the market the most is that forward guidance. And I thought forward guidance was going to be more dovish. That didn't happen. Not only did they hike, they actually had hawkish forward guidance saying future hikes are kind of on the table. Well, that made the New Zealand dollar gain some value, took me out of the position, and now I'm out of it and moving on. It's interesting to know that this almost fully retraced. I'm guessing because if you think about it, the New Zealand economy is doing pretty bad. Like the GDP is all over the place. The unemployment rate is rising, and hiking rates into that sort of an environment is not really considered bullish for the underlying currency. So that could be a reason for the retrace of the move. But again, just took a loss, gonna move on to different things, better things, and that's about it.
Yeah, a lot of central banks are definitely like voicing their their gosh, I can't speak. Their attention to inflation. But another big factor that you mentioned just now is their GDP, like growth, right? Their
Yep.
forward projections on growth, which has really been like hurtful to some. For example, in Europe and the UK, that has really weighed down those two currency pairs. So not only the inflation aspect, but the growth expectations getting slashed. Marco, we're seeing yields higher today. Yes, I mean this whole week essentially, except for one day.
Mm-hmm.
Up 1%, and yesterday was up 1.8 on the 10-year. Is this because, I'm asking, because the market's pricing in higher rates because of the Fed meeting minutes or what they could say? Or is it more of a reaction to oil in the Middle East? Because oil, I didn't know it until just now, but it's up. It was at one point up 5% on the day.
Yep. I would say it has nothing to do with the meeting minutes. It has everything to do with another scare about the Middle East from Trump. So yes, oil is up, but if you look at the data from the Strait of Hormuz, the amount of ships passing through is still pretty similar to what we had in the last week. So ships are still passing through, which means technically there's no need for higher oil prices. This is mostly panic buying, I would say. Now, going into the future, I think it's all about what do you believe. So do you trust Kevin Warsh to be hawkish, as he mentioned that he will be? And do you trust Trump to escalate the conflict going into midterms? I would say I don't trust either of them.
I was going to say the same thing.
Yeah, so basically Kevin Warsh, yes, he was hawkish at the start, but most of the new chairmen that come in, they try to be hawkish at the start to set a stance, to sort of set a persona, and then they slowly loosen up as their term progresses. Trump, I don't trust just because he tacoed like 90% of the time already. So I think to escalate going into the midterms, to risk the Strait of Hormuz being closed again, to put the blockade, to risk CPI going above 5% would be suicide. Like it would probably be political suicide. And I just don't see him doing that. I think his presidency and the feeling of power and the money that comes with it, manipulating the markets and such, is a much higher priority to Trump than the Middle East. Even if they do have a nuclear bomb, Trump is a simple, is he a simple guy? I think he is pretty simple. He likes money and power, and the Middle East has very little to do with money and power for him personally.
Yeah. I think so too. Like he would be walking back essentially all the progress that he made with the midterms coming up. But another thing too to think about is that he can't be president again. Now there are some like specific crazy scenarios where JD Vance and then he's a vice president, and then JD Vance, somehow something happens to him, and then sure, right? That's more of like your tinfoil hat on. But who knows, right? Who knows? But fun fact, Marco. But Trump has officially surpassed Nancy Pelosi as far as activity in the market by like 100x. So
yeah, I saw the last report.
Yeah, so
I don't know what to say. Like it's a bit sad,
you don't know what to say.
Yeah, I just don't know what to say.
Welcome to the U.S., man.
Yeah.
But yeah. So we'll see what happens. Besides Kiwi dollar, Marco, anything else that you're looking for? Me personally, not really. I mean, I mean, if we have followed through to this US dollar, then maybe I flip positions. But if not, I kind of stick with the trade. Like, I'm basically near my entry point on dollar Swiss, so nothing too hurtful there. As far as the Edge Finder reading goes, we did get a flip to bearish camp. I think it's still bearish, yeah, -7. So there's really nothing much I could do now, to be honest with you.
It's even bearish. Okay, that's actually pretty good.
So I'm curious to know, actually, Kiwi Swiss maybe to the downside. I just saw that it's getting a very bearish reading. It's actually reacting to that 200-day pretty well. -8.
I would say it's too flat.
Yeah, it's very range bound. Don't get me wrong. Let's see if it's even worth it. How far is this from here? 50 pips. Yeah, it's not worth it. But yeah, anything else that you may be looking for?
To be honest, at the moment, I'm just waiting for Trump to either tackle or escalate. Now, I think there's a 90% chance of a tackle. So basically, all of the moves from today should retrace, and maybe like stocks can even gain value because for some reason, when there's bearish news for stocks, they sell off a little bit, but when Trump announces bullish views, they just skyrocket. So I'm waiting for that. And the second thing I want to see is the CPI print next week. So I think next week on Tuesday, we're getting the US CPI. Until that point, it wouldn't really mean much for me to stack on new positions. I just don't think what sort of an edge I would have in putting on new positions. Maybe I can add to my dollar short exposure. So maybe I can sell USD Swiss, which I know you're in, which I think is actually a pretty good trade. But other than that, I don't have much. I'm also seeing a lot of other professional traders on Twitter. They're also patient. They're sitting on their hands. So
yeah, yep. The dollar Swiss short, I really like a lot for a lot of reasons. But I have to be honest with myself here. If you do see a continuation of the war escalating, yields higher, if Trump does not tackle, then yes, this trade does get disrupted.
Yep.
And for the viewers out there, this is kind of what I'm looking at. So on a higher time frame basis, you have this long level of resistance here that has capped advances 1, 2, 3, 4, 5, 6, 7 times, potentially 8 if this level holds now. And if you go to like a micro time frame, you can see here that you do have like this trend line that is holding up well to the bearish side. So maybe that could be an indication. If you kind of zoom in, that the trend is kind of reversing on the dollar. You also have the edge finder getting a bearish reading of -7, which is working in our favor. If you go to the recent kind of just activity in the options market, let's go to net options flow. You can see the US dollar. You can see that at one point it was very bullish. That momentum has slowed down and has flipped bearish here. So net bearish options flow for I think it's UUP that it tracks, if I'm not mistaken. And then just from a little cherry on top, if you go to the annual seasonality and you go back 10-year average, you can see here that in the summer months, USD CHF does kind of point to the downside. Now we are well above to the average here, so we're pretty up there. But I do think that there is a chance that that continues to the downside. So I think that you have a lot of fundamental factors, seasonal factors, technical factors pointing to the downside. The only thing that is disrupting it right now is the conflict, the little spike in the conflict, which that can be taken off the table very, very quickly. So unlike a hot CPI print, that it is what it is, that's the data and that's inflation. You can't really just take that away. The war can be taken away at a moment's notice if people come to terms and agree on that. Similar to like the tariffs, right? Like the tariffs was a self-inflicted kind of thing that the US put on itself that could have been taken away whenever. So as long as I have that kind of confluence there pointing to the downside, I think it's a pretty good risk-defined trade. Actually, I just like the premium as well. Like you are selling at the top end of this range, which works out pretty well. So same thing, Marco. I'm kind of just sticking with this one thing, and then I'm waiting to see if there's follow through. And if it goes against me, then maybe I repivot back into like a euro dollar short, which I'm not in the trade, but this is kind of what it would look like hypothetically. Maybe, I mean, dollar CAD, I mean, I wouldn't consider this a pullback, but in this market, who knows, into this level. But yeah, that's pretty much what I'm looking for right now.
How are the swaps with dollar Swiss?
Dollar Swiss, it's actually 3.75, so they're pretty hefty, I would say. So it's in my best interest that this trade works out relatively quickly, and that this is not a trade that I hold for months, or 4 weeks to a month. At that point, you'd be like, okay, at that point I would be looking for some positive swap opportunities to go ahead and offset this if I am expecting to hold on to this for a month. So what I did in the past, when I was shorting dollar, or when I bought the Aussie basket earlier, Marco, earlier in the year, when I played this move, so I was short dollar yen, like kind of like right here. I didn't capture it all, but I captured some of it. Obviously, with dollar yen shorts, you have a lot of negative swaps going against you. At the same time, what I did was I bought Aussie Kiwi, Aussie CAD, Aussie Swiss. and all of those provided positive swaps. So cumulatively, they offset the negative swap of dollar yen. So if I do foresee myself being in dollar Swiss short for weeks to months, then at that point I would have to like kind of brainstorm and look for positive swap opportunities to offset it.
Yep. Makes sense. And what's your take on USD JPY? So the MOF, the BOJ, they're pretty quiet. We're not seeing much on the breaking news. So I think a couple of weeks or months ago we saw news like someone from the BOJ doesn't like the current exchange rate. This Japanese person doesn't like UJ climbing to 160, blah, blah, blah. Now it's pretty flat, it's pretty quiet. They had the perfect opportunity to intervene. So let me show you.
I think USD JPY to 200, Marco.
To 200?
Okay. No, I'm just joking. I think it's I don't know. Definitely not to 200. I hope not. But I think it's difficult. I'm betting right now on dollar Swiss short. So essentially my thought process is like maybe we see some USD weakness. I would hope that weakness translates into dollar yen softening. If that translates into dollar yen softening on weak US fundamentals, then perhaps that can provide a good opportunity for Japan to intervene. And then at that point you can find some interesting buyable dips. But if you don't get that perfect scenario that I'm talking about, then I think dollar yen just drifts higher, especially if you have a reflare in the war in the Middle East. And if you do get that bump or softening in like anything Japan related, I saw on the Edge Finder that the entire yen basket is getting a strong read, or a strong weak reading. So, for example, CAD yen, pound yen, Aussie yen, all of them are kind of pointing to the upside, getting bullish readings. Sorry. At that point, then perhaps if you get a meaningful dip in the Japanese yen, and I was looking at JXY. So JXY, you have this like level here of resistance. So if you get some kind of a pop intervention, which that is how many percentage points away? It is 4% away. That's also lined up with the 200-day moving average as well. If you get a meaningful pop of that magnitude, then I would be open to, as long as the Edge Finder still points in that direction, to buy up the entire yen basket. I think that would be a pretty good way to go about it. And if I'm still long dollar Swiss, if I'm still short dollar Swiss, then that whole basket can offset the swaps, and I'll probably end up net positive.
Okay. That's an interesting plan. Yep.
But sorry, I know you were going to say something, and I kind of went on a tangent there.
No worries. I just wanted to mention that, the BOJ had the perfect intervention sort of time where they could have went in last week on Thursday, where you had the big red candle, and they didn't, which is it's a sign. It's a sign that they're kind of staying away from the price, and they don't want to participate in that. So probably
they had essentially at that time perfect storm. The Middle East conflict was kind of muted. You had the bad NFP print, which caused some softness in the dollar. And then you had that U.S. holiday, the 4th of July observation, where market like that would have been the time, man.
Absolutely.
You would need another kind of perfect scenario just like that to pop up again for you to have a good opportunity similar to that one.
Yeah, and they didn't use it. So I don't think they're just going to go kind of blindly come in and intervene. But you never know. So I'm looking to see for my USD JPY short, I'm looking to wait the CPI print, see if that produces a bit of dollar bearishness, and then look to probably exit for break even or a little bit of profit. I'm gonna have to wait and see, but I have decided to hold on at least until the CPI print next week. And the seasonality for UJ is actually bearish for July. Yep. So it's bearish for dollar Swiss. It's bearish for USD JPY. I think it's pretty bearish for the dollar in general, kind of July.
You never know, man. Like sometimes, especially for like those very lucrative trade opportunities, you got to feel some pain before it starts to show up,
Yep.
This could be just, short sellers getting washed out, and then the actual move happens, right? That happens all the time with moves like that. So, I was going to say something, but I completely forgot. that the Japan has about close to $1 trillion of USD worth of ammunition to intervene, and they only used like less than 20 billion. So they still have ample
Okay.
reserves. So
Yeah,
that's
yeah.
another thing to kind of be mindful of as well.
They're loaded. They have
They're
and
they're loaded, man.
they can push it to 140.
They
if
can
they want
push
to.
it to 95, Marco.
95.
Oh man. All right, man. I'm gonna go ahead and pivot out here. Have a good rest of your segment.
Yep, will do. Thank you, Alan. See you tomorrow. And yeah, let's see that DXY actually go to 95. It would help. Absolutely.
UJ to 95.
UJ to 95 would be even better.
What does that look like here?
I can measure it.
I don't think it's ever been done before. Well, back in 2013. So 2013 levels.
Just 13 years ago. That's doable.
It's not bad.
Yeah.
It's obtainable, you know?
40%.
Almost 6,600 pips away. That'd be pretty good. I could retire, man.
Probably. Yeah, I think that would be a game-changing trade. And I know everyone in the Discord would be happy, especially ball out.
I would even distribute some of the funds.
You would?
Oh yeah. For you guys, I would. But all right, Marco. I'll see you later, man. Take it easy.
Yep. See you later. Goodbye.
Bye-bye.
So let me check the comments. Let's check the comments. Interesting enough, if you look at the yen by itself in the economic tab, you'll see yen is bullish. Yeah, that is an interesting point. If you look at the heat maps, JP, it's actually in the blue. So, but it doesn't matter at the moment. It doesn't seem to matter much for the price. Marco, at the time of the NZD short idea, all prices were low. That is true. During RBNZ press conference, reporter did mention about the labor market being awful, to which Bremen said that the economy is recovering better than expected and growth will take care of it. Well, yeah, it was a net hawkish event. Now, I think earlier this year, I tried to trade an RBNZ event. It didn't work out. So I lost money 2 times already this year trading the RBNZ. It happens, you know, looks like they are super hawkish and they just don't want to pivot. And it's fine. It's fine. You also have to think like a central bank. The main concern of a central bank at the end of the day is inflation, because inflation impacts everyone. Unemployment rate a rising unemployment rate impacts 5% of the population. But rising gas prices, rising inflation impacts every single voter, every single person in the country. So inflation is always the #1 priority, especially like some central banks have a dual mandate. Some of them have just inflation. So the US has a dual mandate, which is growth and inflation. But I think the ECB only has inflation, if I remember that correctly. Since CPI is previous month data, it could not matter as much if escalation continues. Yeah, that is true. So if the escalation does continue, the CPI print next week won't matter much. But it also won't matter much for my positions because I will probably get stopped out of everything. And it's interesting to see UJ climbing up, but GU climbing up as well. So like the pound has been really, really resilient. Do we have GXY? No. So I thought there was like, you have DXY, you have JXY. I thought there was something for the pound as well. FOMC, it's just the meeting minutes. So I think it's going to be a non-event. If you look at this week, meeting minutes, they start in an hour and a half. So yeah, I think it's just going to be a non-event. But Nick will be streaming into the FOMC meeting minutes. So if you want to get the sort of opinion from Nick, definitely stay tuned on the stream. The reason I think the meeting minutes will not be important because that whole event happened before oil went drastically lower. So we had the event, I think, somewhere here, and then we had oil just go much, much lower. And we had the Strait of Hormuz opening. We had a lot of ships passing through. I think currently there's 40 ships passing through the Strait of Hormuz per day. Trump matters more than war? Well, in the short term, yes. Don't trade the FOMC. I just think it's going to be a non-event. It's not an interest rate decision. It's just the meeting minutes. A1 selling UJ. Where can we watch the FOMC meeting minutes? It's not an event. I think it's just a document that they put out. And if you want to get all of the information about that, well, definitely keep watching the stream because Nick will be streaming right when the meeting minutes are released. So those are the meeting minutes from the meeting. Okay. So basically during the meeting, everything is scribbled down on a piece of paper or in a document, and then that is released, what, a couple of weeks later? Something like that. BXY. Okay, that is correct. British pound currency index looks pretty bullish, looks pretty good. The pound is doing really well. I'm seeing a lot of relative strength. So possibly adding some pound long positions, it's not such a bad way to go. Yeah, it's not such a bad way to go. Nas, hello. Edgefinder score on gold, sure. Let's take a look. Top setups. Gold. Neutral with a score of 2. What about silver? Neutral -1. Okay. By the way, I just wanted to mention the sponsor of today's video or today's live stream, which is Ola Prime. So if you're looking to get funded and expand your trading capital, do check out Ola Prime. This is their Trustpilot. I would say it's pretty good. If you have been in the space, you would know a score of 4.5 is pretty high. Essentially, there's 2.5K reviews. That's a pretty big number as well. But another thing I like is they don't have a consistency rule. Consistency rule, basically, if you're a swing trader, the consistency rule sucks. So if you have a week where you, let's say, win 100, then you win 600, then you lose 200, then you lose, I don't know, 200 as well, and then you win, let's say, 50, you have one big outlier, which is plus 600. Okay, and that does not fit the consistency rule on most prop firms. So what works if they have a consistency rule, every single day needs to be similar. So I'm talking about this, like -30, and then let's say 5. So this is kind of every day is similar in size. But Ola Prime, they don't have a consistency rule. So for swing traders, it's a really good option. And on top of all of that, with the code A1 Live, you get 35% off. Okay. So if you're comparing Ola Prime to FTMO, yes, this is a new prop firm, but you get a much, much better price. So I would say really, really good option to think about. All of the information is in the description of the stream. I just think the real interest rate of GEP right now being the highest could be the reason. They do have one of the lowest inflation and second highest interest rates. Possibly, but this is really short term. I don't think this is connected to rates. Gold. So my take on gold, because I know a lot of you are following it, I'm fundamentally bullish because I'm expecting higher interest rates in the future from the Fed. So fundamentally, I believe gold is bullish. I do want to see a break of the 200. So I need a break of the 200 EMA because right now it's stuck in no man's land, in my opinion. So 4K is the support, 200 EMA is the resistance. And we can stay in this range for a really, really long time. So fundamentally bullish. I do need to see a break of the 200 EMA, and I need to see a bullish print on the edge finder. Okay, right now it's neutral. I need to see a bullish print. Yeah. By the way, if you want to get the edge finder this month, 45% off. So edge finder is 45% off with the code Marco. The link is in the description. I think this is, this absolutely is the cheapest price of the whole year. So if you want to get the software, this is the best time to do so. For me, it's an absolute game changer, especially like my back testing on gold and silver and forward testing as well using the edge finder. I've gotten some really, really good results. And also, my advice would be, if you are a gold trader mainly, if you came into the markets in 2025 during the massive bull run, diversify. So look at different things. Join the A1 Discord. Start looking at stocks. Start looking at Forex. Start looking at crypto. Not at the moment, but keep it on the radar. Because gold tends to have periods where it stays flat for months or years. Look at this. So this period of just range-bound price action was 1,224 and 44 days. And this is going to happen again. This is not the first time. If you go back, see, look at this period. 2,680 days. So we can absolutely get another market condition such as this one. That's why it's important to diversify and not just limit yourself to one asset. I did that mistake when I was starting to trade. So I traded purely technical analysis and I looked at only 6 currency pairs. The start was fine, but soon all of the currency pairs stopped moving because the central banks stopped moving the interest rates and all of the money went into a different asset. So my strategy went into a large drawdown, a long drawdown, and that's when I started to expand into different things, and that's when I started to apply the edge finder. So most professional traders, they trade a lot of things because if they focus on one thing, that one thing is going to have periods of months or maybe even years where it just doesn't move. Okay. SMB's chairman Schlegel, we're ready to intervene in the FX market if needed. That is interesting. Okay. So let's take a look at the... Also, let me look at the schedule because I'm not sure who is next. Chris is coming at 1 p.m. Okay. Okay, so I have 15 minutes more. Okay. So let me then get ready for another 15 minutes. Breaking news. Let's take a look at that. Trading, breaking news. Forex. Where's Schlegel? We have some stuff here. SMB chairman, medium-term inflation pressure is almost unchanged. Okay, this is it. So SMB chairman, we're ready to intervene in the FX market if needed. Interesting. Now, the main chart to follow this would be Euro Swiss. So Euro Swiss, the key zone, the key level is 0.9. I did take a buy position. Just a second. I did take a buy position, and it was a pretty decent setup on Euro Swiss back in March. We are no longer near that area, so I'm not exactly sure why the SMB would intervene. I think they won't. So I think the price would need to go back near the 0.9 level, and that would make the intervention a lot more likely. So we can look at also USD CHF. I don't think it's problematic. I think as the dollar gained value, we had that bounce to the upside. So this looks normal as well. I don't see a massive reason to intervene. Maybe I'm overlooking something, but yeah. Am I going to trade a possible intervention? No. Interesting point from SMB on a day where CHF doesn't appreciate. It's weird. I would say it's weird. Yeah. I'm looking at the levels. I'm looking at Euro Swiss. I'm looking at Dollar Swiss, and I don't see a massive reason to intervene. So pretty strange. I'll keep a note of that. You know, when something strange happens in the markets, it's best to keep a note of what happened. If you look at the stock market today, so it basically sold off a little bit. Now it's starting to retrace. It's starting to look like a triangle, which means we either get a break to the upside or a break down. See, this is the triangle. So do we break up? Do we break down? We are going to see. We are sitting above the 20 MA, which is a bullish sign. We're also heavily above the 200, which is definitely great to see. I think it breaks soon. So I think we will get some volatility. We'll get some movement pretty soon. Now, just as far as the news from Trump. Okay, so the latest one, Trump, I don't think the Iran war will start again. That's exactly what I mean. Okay, so not sure I want to make a deal with the Iranian leaders. Let's finish the job. Well, so this statement, it means escalation, and this means de-escalation. But if you have been following Trump, you would know that there's a lot of back and forth. The main motivation, as far as I can see, is Trump wants to get reelected, or not him, but Republicans. They want to get reelected in the midterms, which automatically gives Trump power, because if a lot of Republicans are in the House, essentially anything that Trump wants to get passed, any new law that he wants to get passed, any new bill, the big beautiful bill, if he wants another big beautiful bill, and if he wants to get it passed, he needs to have allies in the House. I think, is it the Senate? Is it the House? I don't know much about U.S. politics. I should probably learn about it, but at the moment I don't know much. I just know if Trump wants to have another big beautiful bill, he needs to have a lot of Republicans to be reelected in the midterms this year in November. But if he escalates, if he blockades the Strait of Hormuz, if he allows inflation to go back up, so if he allows the CPI, so inflation, if he allows the CPI for the US to go above 4.2% and to keep climbing, the voters will hate that. So it'll definitely reflect on the voters. As I mentioned, the jobs data usually impacts 5% of the population, but inflation, it impacts everyone. So inflation, I would say, is the biggest problem that a government or a central bank has to solve. And this doesn't look great. So I think Trump is gonna, as far as actions go, I think he's gonna stay quiet. I think the strait remains open. I think ships keep passing through. Inflation naturally falls. The Fed turns dovish, and the dollar loses value. So, might help my CHF JPY play. We would intervene, so buy yen instead. Just got long on GBP/USD. Euro dollar. Okay. Let's take a look. So euro dollar, I would buy. So if I had to do something, I would go in with a buy position. I think the pound looks a lot better. Yeah, the pound is crushing it. Euro dollar staying stagnant and flat. Let me see Euro GBP. What's happening on that? What's happening there? So Euro GBP starting to melt lower. Now this is a potential trade. This is actually a potential trade. If you look at the top setups, we go to Euro GBP. Neutral, but -4, so pretty close to a bearish score. This doesn't look that bad. It's starting to melt lower. There's no massive support in sight. The first big level of support could be here. So if we can pull back a little bit, pull back to the 20 EMA, this might actually be a decent setup. So let me put it on the list. Do I have it here? No. Euro GBP. Oanda. Let's put it on the watch list. So 2 things I'm going to watch for. First, I need to get a better price. So I don't want to just sell at these lows. I usually prefer to sell around the 20 MA, and I would need to see a bearish reading on the edge finder. So those are the 2 things I'm looking to see. What is the seasonality? Seasonality is actually bullish. Okay. It looks interesting. So yeah, if you want to get all of my trades, by the way, if you want to get all of my positions, all of my trade ideas live when I take them, well, definitely do consider joining the A1 Trading Discord. Link is in the description of the stream. And you can use the code Marco to get 25% off. So yeah, definitely join us. There's Nick, Iwind, Alan, Chris Pulver, and me. So there's a bunch of traders. Personally, I would say it's the best Discord in the trading space, because it's a serious Discord. It's not like full of people that just started to trade a week ago. Now, that's not to say that you can't join as a beginner, but you need good mentors. You need good experienced traders to help you. So we cannot be the blind leading the blind. It needs to be someone with experience leading someone that is new. And that's exactly what we have in the A1. Shut up about the gold. Okay, so I know a lot of you want to see gold, and just because of Finesse Soul, I'm gonna talk about the gold. Okay, so I know you want to see it. I can see you're super excited to see gold. So let me show it once again. It's stuck in a box. Okay, it's stuck in a box. I need to see a break of the 200. I need to see a bullish print on the edge finder, and then it would be game on for me to take a buy position. Now, for all of the gold traders, my best advice would be there's other things to trade out there. Gold isn't conducive at the moment. It looks like shit. It looks flat. It looks range bound. It looks stuck in a box. So do think about widening your horizon a bit, because if you're just going to keep trading gold, yes, you may make a bunch of money. So you may make a bunch of money in this phase, but you will lose it all and more in the correction, or even worse, in the range. Okay, you'll lose it all here. Now, what professional traders do is, let me tell you how professional traders played the recent, let's say, year and a half of trading. They were trading gold in 25, absolutely, and they were crushing it. Then they probably went short somewhere near the top, and then they flipped into stocks, into artificial intelligence, into the Nasdaq. See the massive rally from March? This is what they traded. And now stocks are flat. So where are they going next? That's for you to decide. I would say it is into Forex, into the US dollar. I think the US dollar is the next big story, the next big thing to trade. What time is the meeting minutes? In 1 hour. So the meeting minutes are in 1 hour. AUD USD. Okay, let's take a look. AUD USD. So let me run it through the edge finder. Whoop. Neutral with a score of 2. I would say I'm bullish, although it isn't my favorite currency pair. So if I had to pick a direction, it would be to the upside. I would be bullish because I'm bearish on the dollar, like net bearish. But the Aussie doesn't seem so strong lately. It seems to be kind of losing the steam, losing the momentum. It was pretty strong at the beginning of the year, absolutely, but now not so much. We have hit the 200 EMA and bounced. That's a good sign. But yeah, the conclusion is I think there is better things to trade out there. Have you exited USD/JPY? No, I'm still in. So I'm still in this thing. First, I'm waiting for Trump to potentially taco. Second, I'm waiting for the CPI print. So CPI print next week. Or is it next week? I'm betting that the CPI print turns dovish. Okay, so that the inflation prints lower than expected. That is what I'm betting on, and I'm gonna try. I have a stop loss set, but I will try and keep holding this position at least up until Tuesday next week. I know the swaps are pretty high, and yes, the swaps are getting pretty expensive, but it's a part of the game. Any expectation on the minutes? I think the meeting minutes are going to be a non-event, so I don't think much will happen from it. The whole meeting. So what you have to note is that the whole meeting happened before the MOU, before oil went back to the pre-war level. Okay, so kind of everything that happened before the MOU, everything that happened before oil went to the pre-war level, I would just discount. You know, I would just discount it. Probability of a rate hike. Well, what I can tell you, if we go to the Fed Watch tool, I would say the current probabilities are definitely over-exaggerated. So I think the current probabilities are way too high. I think 46% chance of a hike and then 26% chance for 2 hikes. I think that's too much. I think we're going to get a repricing. I think the Fed is actually going to be more dovish, and that should happen, or that should print in the Fed Watch tool pretty soon. Okay. Now let me just check who is the next guest. Just a second. I think it's Chris. Yeah. And what's the current? Yeah. Okay, cool. So just to wrap things up, and then I'm going to pass the stream to Chris. Meeting minutes today, I think it's going to be a non-event. I think you need to watch out for the CPI print next week. I think Trump is going to do a taco. 90% of the time he does a taco. He already did it. If you look at the last print, Trump, I don't think the Iran war will start again. I don't think Trump can even sort of afford to start the war and close the strait and bring inflation back above 5%. So I'm still positioned short USD and looking to trade that theme during July. Guess what? One more thing. Dollar seasonality for the dollar is actually bearish for July. So it fits nicely with my analysis. That's it from me. Do not go anywhere because Chris is going to be here in 30 seconds. I wish you good luck for this week, and I will see you tomorrow. Goodbye.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
What's happening, everybody? How are we doing today? Happy Wednesday.
here's probably my most important chart to share as far as the indexes go. Here is the S&P 500. This is the CFD feed, so trading 24 hours essentially. This is now 7 days of indecision, and still in 7 days of indecision. Even today, with a gap lower and flush down to retest overnight lows. Here's your futures market. So we had a nice flush down overnight. We came back up to retest. This black line is daily VWAP. You can see some pretty good price action for the day. Flushing down, retest daily VWAP, chops around there, and then retest the lows very close to that, and then back up again. So, kind of a range-bound day. I look at this chart here. This is 7 days of indecision. Like Marco just said, the CPI print next week, earnings season kicking off with the financials next week. Yes, we have FOMC minutes today. I don't think it's going to give us much. I don't think it's going to be much of a catalyst to trade. I'm looking for some type of direction and confirmation, possibly Thursday, Friday. Whether we go higher or lower, I don't know. But here are the key levels. If the market finds support like it did today, 7420 is support. 7420. The resistance is 7540. So 7420, 7540. If price refuses to break out above or below, we have to be patient. And even though semiconductor stocks are all over the place, and Micron's down, and SanDisk is down, and Hynix is down, and doesn't matter. If the S&P is absorbing this and just there's more rotation, because we do have rotation. Here's market breadth. 67% of S&P stocks are above the 50-day moving average. That is an encouraging sign that we are rotating and taking some profit on high flyers, taking some profit on tech, taking some profit on semiconductors, chips. Okay. That pullback is probably going to have good demand. I'll get to a Micron chart in a moment here, but this is the 50-day moving average. This is the 200-day moving average. Again, pretty healthy positioning right now for the S&P. 66+% are above the 50 and 200-day moving average. That's pretty encouraging. The Nasdaq looks a little bit different. We have 63% of stocks in the Nasdaq above the 200-day moving average, but we only have 53% above the 50-day. So a bit more headaches in the Nasdaq as far as, maybe the split of are we going to roll over where more stocks are below the 50-day or correcting in the Nasdaq? We'll see. Meanwhile, the Dow is hitting all-time highs. Not today. The Dow took a pretty big dip today with a gap, but we recently hit 532. This has been making fresh all-time highs, unlike the other indexes. Okay, the Russell coming off these recent highs as well. I'm still interested in buying dips in the Russell. We could probably face a little bit more headwinds or some uncertainty or some pullbacks on the Russell with the Fed likely being a little bit more hawkish right now. I do have some concerns with these two charts, the U.S. 10-year yield and the U.S. 30-year yield. Okay, this isn't something that it's like, oh my gosh, this puts us into a bear market. It's not that. But what I'm worried about is this is the bond market smelling BS from the Fed. Because Kevin Warsh comes in and says, we're very hawkish. We want 2.0% inflation, price stability. That's our mandate. Task forces, we're going to figure out how to do this with real-time data. We don't want the markets to have to rely on the Fed for transparency. Markets be markets, will be the Fed, right? So at first, it sounded hawkish and the markets kind of took the bait. But right now, they're not. And so as we come into these crucial windows of end of this month with the FOMC and a press conference with Warsh, okay, fine. There's nothing in August. There's no Fed in August. It's going to be September. September is supposed to be when they may raise rates. And I think that I've heard a couple of interesting narratives, like, they're gonna fake it and try to talk hawkish, but not necessarily have to do anything. They don't want to raise rates. But now that we just had another, flare up in Iran and there's attacks again, it's the memorandum of understanding is now off, or the ceasefire is off for today. Maybe it's back on tomorrow. Who knows? But as far as the CME watch tool, the Fed probability shows a 51% chance there's going to be a hike coming in September. Now, even if there is 1 to 2 hikes, right? Do you remember Bank of America in the last month said there's going to be 3 hikes by the end of the year? Maybe there is, but that is going to put a lot of pressure on equities if that is the case. Okay. At the same time, gold continues to slide lower. Okay. Gold does not look good from a technical standpoint. We are below the 50-day moving average. We are below the 200-day moving average. Now, usually this death cross may be seen as somewhat contrarian, because if we're carving out a little bit of a bottom here, I could see gold rallying back up into let's say 43 to 4,400 or so, find some stiff resistance right here, and then sell back off for more lows. Now, do I think that this is a terrible trade to be long gold? Not if you're long term. Okay. I am still accumulating everything with options and everything with income trades and willing to own shares of GLD way, way, way down here. And so I'm not even close to these trades threatening my positions. Here's an example. Here's GLD. Okay. So we're trading at 373. I'm going to walk you through a couple of my portfolios with what I'm doing on gold right now. Okay. I'll look at Bitcoin. We'll take a look at gold and silver, look at oil, look at dollar, I'll look at some currencies. I'll do everything. I'll do everything. Okay. No worries. All right. Let me take a look at a couple of these positions here. I'm just going to pull one account that I know I'm trading pretty actively. GLD. So I have a 310 by 300 ratio spread, 295 by 275 ratio spread, 280 by 265 ratio spread. These are all in pulver alerts, by the way. 285 by 270 ratio spread. I have out of the money bull call spreads, defined risk for, I'm trying to think here. This one is bull call. I guess I have a huge debit here, but it's a 420 by 485, and then it's a 475 by 525. I can probably separate these four. But nevertheless, it's two debit spreads, and they're out to like 2028. So my point is, if I'm going to take any assignment of GLD, let me do the math on these trades. Because although we have been sliding lower, and although it shows that I'm down, $3,000 in this trade, I'm still pulling in a decent amount of premium every single day. Like like theta, time is helping me. So this trade would be a break even of around this would be 289. That's a break even of 289. This would be a break even of, that'd be 255, roughly 250. Break even at 250 on GLD. This would be 15, so 250, another 245 break even. This would be 15, so 265. That'd be 259 break even. And this one I'm not really worried about because they're tighter risk. So my highest ownership price would be 289. Okay. If we get to 289 on GLD, that is a 43% correction off the all-time highs. Is it possible that we get there? Yeah. Anything's possible, right? We could have a much worse position. We could go down 50%. We can go down 70%. I don't know. But if I own gold down here and I own it at a 40 to 50% discount from all-time highs, I'm willing to make a calculated bet that give this trade time. If we resume any type of uptick, remember, this was a 4 to 5 year bull market that is just now showing signs of correcting. So could it take time? Yeah, it takes lots of time. And it's going to drive traders crazy with all the noise in between. But if we are down 40 to 50%, what is the return on capital if we get back to those highs again? 100%. That's why I'm long. I'm not scalping in here when it's noisy. And right now, like gold has pressure to the downside. If it does pop up, I think gold pops up, gets everyone excited for a second, but then probably falls lower. And that's fine. Let it fall. You know who's still buying gold? Central banks. There's probably a reason. Do you think they have stop losses on their gold? No. They're just going to buy and hold forever, and probably buy more and more and more and more the cheaper it gets. So anyway, I think there's a bid there. Okay. Bitcoin. Bitcoin, structurally, technically on the daily chart looks pretty terrible just because we are still below all of the moving averages here. It may be into some type of falling wedge pattern, which would be something like this. If the lows just get slightly lower, something like that. And this is a maybe. I don't know if this is the pattern, but if we spend time doing this on Bitcoin, eventually, I could see this setting in for a low or breaking this structure and then getting us back to like the 100K mark again. But it's going to take time to kind of bottom out here in Bitcoin. If it goes lower, I'm just telling you, be prepared for 40, be prepared for 30. I still think there's an asymmetry there to be long Bitcoin. But the better trade to me is waiting for a bull pattern. So if this is a falling wedge, which is a good bottoming pattern, it's not time to trade it here. It's wait for confirmation and get the breakout. Because that's when the breakout really rips and we go from like, let's say 65 to 100,000. That's a good trade. And if there's more to it, then you get pullbacks, you reposition, and you get fresh highs. But if we slide lower, just because of, I mean, and I'm curious too how Bitcoin behaves. If the Nasdaq and the S&P do have like another 5 or 10% correction, where's Bitcoin? If Bitcoin hangs out around 60K and has little to no downside on an index sell-off, that's probably a good sign that most of this crap has been priced in, right? So anyway, there's gold, there's Bitcoin. Here's silver. Silver, I'm playing very similarly. Even if we hit symmetry, this yellow box I have in my chart, this is a high to low, lower high to lower low. So high, low, lower high, lower low. I am prepared for this. Silver pulling back to about 40 bucks. Okay. A lot of my trades, same thing. 50s and 40s, 30s, naked puts, ratio spreads. They're all in pulver alerts. I have a decent amount of trades running on silver and gold because I like the medium to long term on both of them. Okay. What would that pullback be on silver? You're talking about a 60 to 65% correction on silver. If that ever turns to go up to these highs, yes, please sign me up for that potential gain. You know, if my break even is down here around $40, it would go back to highs. That is a 200+% move. I'll take every dollar of the allocation and basically triple it. Okay. All right. So I like them, but you've got to be medium to long term. You got to block out the noise. Otherwise, right now the structure is leaning bearish. And that's fine. If you want to trade short term and trade what you see, the alignments are bearish, stay bearish. It's just a trade if you're scalping. But to me, the big picture is I'm accumulating. I went from, you know, a pretty healthy allocation to about 20% gold, silver to now 0. And so I'm getting back in there where my positioning is now starting to build back up to like 5% allocation, 10% allocation. And I'm going to start building that back up to that, you know, kind of 20% again. All right. Dollar index. So dollar index, I think this is your risk on, risk off gauge between currencies and the equities market. Don't ignore a couple of levels here on the dollar. If this is a channel, if this is in fact a channel, okay, this dollar may still have, and this is where I'm saying this is risk on, risk off. If the dollar continues to grow higher, I could see a $102, I could see a $104, I could even see a $106 to $107, but that to me is an awesome opportunity to short for the foreseeable future. If we get up to like 106 or 107, I'm probably taking a pretty healthy short of the dollar. Right now, you know, I was long the dollar. I was short euro dollar. I was, I'm trying to think, short Aussie dollar for a little bit. I was long dollar CAD. Those worked out fine. But I've taken a lot of that profit off the table. So I'm just kind of waiting to see like what is next for the dollar. If it is short-term trading, sure, I can see the dollar being noisy here. But if we don't come back down to like 98, I think this dollar is going to keep making higher lows and higher highs and possibly get back in some of these inefficiencies. Risk off trading in the markets probably leads to a stronger dollar as well. And again, maybe the dollar is waiting a little bit longer to see the clarity out of the Fed. And again, there may not be a lot of clarity out of the Fed. It might be more of a surprise move. That's the hard part about this new Fed chair is the Fed might be zip it up. We're only going to talk when we're supposed to. No more Fed roundtables, no more Fed speakers and members all over the outlets and news media. Just talk during meetings and have a consensus, have these task forces. This is like a 6-month window, by the way. The whole Fed and what we've known for a decade of Fed with Yellen and Powell, what we've known for transparency, tell the market exactly what we're going to do. If the market doesn't have that, there's going to be a lot more volatility. And that's not a bad thing. But I also wonder if this brings in the outlier event of if the market doesn't know, does it do really wild and crazy things to catch the Fed's attention? Like it's so desperate to get the Fed's input that it's going to do something crazy like, you know, drop 10% in a month, like it did back in 2024. You know, drop in a 30 to 60 day window, drop 15 to 20% because AI is busted up and there's too much, whatever. If earnings are not great, this next 30 to 45 days in our earnings cycle, I do wonder if there's going to be additional pressure. I think the demand is still there for chips and scarcity, but this rotation trade is very real. And I mentioned this to Nick that if you look at something like SMH, I think the demand is still very, very high. You know, we're bouncing off the 50-day moving average right here, but I wouldn't be shocked to see SMH, Micron, SanDisk, Western Digital, Applied Materials, whatever it is in that space, do something like this. Just extreme noise, but not really go anywhere, but also go a lot of places where it's like, well, I can make money if I bought low enough and I take profit. Of course you can. But if you're trying to buy and hold indefinitely, it will be like surges and stalls, like rallies and speed crashes. And that's probably the best case scenario, in my opinion. I mean, I don't think the market's going to go straight up again. Okay. I think that noise, if it's angled this way, so be it. You've got some channeling here. If this structure breaks, we come back down to these lows and we kind of bounce around. It gets a little bit messier and wider. But having this low, having this high, having this kind of built-in bid or built-in demand, I think you trade what you see. So for me, I'm probably just trading a lot of options. So I have SMH options down here, MTUM options down here, SOXX options down here. Okay. I'm trading this stuff, but I'm out of the way. I'm trying to be pretty conservative. And that way, if it does come down to retest these March lows, I'm going to own some shares. That's where I'm willing to own this stuff. Is it comes down here, I'll take the stab at, own this thing short term, flip it for maybe 30 to 60 days and see if we can get a reflexive rally of, we come down to 360, we rally up to $400. Cool. Let's make $40 and I'll get out, or put in a trailing stop loss and get very lucky on some type of huge run. But I am not trying to let, this crazy high implied volatility and just tons of uncertainty in price action. I'm not trying to let this beat me up. Okay. All right. What else do we want to look at? We did gold. We did silver. We did Bitcoin. We did dollar. Semiconductors, S&P. Like I said, S&P, one of the most important charts to watch right now is your S&P. It's stuck in a 7-day range. We're trading at 7475. Here's what's going on for me today. I do have a bit of a profit trap up here. We have FOMC minutes in the next 40 minutes. So I want to see if price will get back to this gap, possibly come up into this zone. I think I have a $10 or a $15. Okay. Everyone's asking about the stuff I just did. I'll go back to it. That's fine. But let me go into my chart here for SPX. So I have a couple of trades, 75.25. That's a trade for tomorrow. So I got a couple trades in today. This one likely going to be a full winner. We'll see. Should be a full winner. And then if we get a profit trap up around 7,500, there's a $15 profit trap up there. So this one, I'll protect this one. This is going to be like a $90 winner per contract. This one, if I can get a bonus profit of another like $100 to $200, I will probably take some profit there for a few $100 on the day. I'd be happy with that. But we'll see what the FOMC minutes gives us. Right now, it's just noise. Market opened right here. Market's trading right here as we're coming back to FOMC in 40 minutes. So do we have more direction on the day? The overnight lows were about 74.18, and our overnight our intraday lows today around 74.20. Yeah, 74.21. Okay, so it's a noisy day. I don't know if FOMC minutes are going to give us a lot of direction, but my efficiency on the day, if we're below this box or above this box, that's still dealers doing their job. I would actually like to see, since it's later in the day, if price is going to come back up here, I'd love to see that $15 profit trap offer me a couple $100 of bonus profit. I probably won't hold it all the way to close, but hopefully there's an opportunity there for about $1,500. I'm looking at a pretty conservative couple $100 on the day. And if we're, coming back down to revisit lows, there's another $1,500 profit trap down here. So I've got it surrounded, as they say, but we'll see what price does. Okay. What up, Nick?
What's up, Chris? How are you?
I'm good, man. How are you? Happy Wednesday.
I'm good. Happy Wednesday. Chris, I've got a fun experiment for us.
Okay.
Let me ask you this, and I'll give you my answer too.
Okay.
So do you think, I've been playing with something, I want to show it. So do you think, two prompts, inflation is more likely, and these are hard questions, so no right answers, nobody knows for certainty. Do you think that inflation in the next few months is more likely to rise or stay stickier than people think? Or do you think it is more likely to fall more than people think? Which one do you think? If you had to, I know it's like such a difficult prompt.
Well, the flare up in oil today does not make me think, oh my gosh, here comes inflation. Look, everything with Iran is going to be, Trump's going to completely backpedal on everything that happened today.
Mm-hmm.
He will. And it'll be the same crap we've been dealing with for like 60 days of this, which is, we got a deal. There's no deal. We're going to blow them to smithereens. We got a deal. There's no deal. It's like, enough, dude. Like, tell us when it's officially over, please.
Right.
But we don't know. So I don't think spiking back up to like the 70s is necessarily, the oil trade is on again. I still think oil is probably subject to what does the Trump administration want? What do they need going to the midterms? What does the Fed want to see? They want to see lower oil prices.
Yep.
And so I think the de-escalation is more important. And so I think we have sticky inflation at best. But what I do think is by next week's CPI, we're going to see it budge very little. It's probably still going to be 4.1, 4.2, maybe 4.3. Not a huge jump, not a huge decline. But I think the Fed is trying to really throw that dart at the bullseye, hoping that September's rate decision is like, look at this, CPI is down by 0.3, 0.5%.
Okay, fair enough. So let's say
really going
slightly cooler than expected right now. That's
Fair.
the base case. Okay.
Okay.
Economic growth. Do you think the economy, jobs data, metrics, and by the way, I'm going to kind of go with you. I think inflation is, if I had to pick, is it going to rise more than expected or fall more than expected? I would say probably fall more than expected as well. So this is your answer. This is my answer.
Okay.
Economic growth. Do you think it will be more resilient than people think? Or do you think it will be less resilient than people think? Jobs, PMIs, retail sales, the consumer. What do you think?
I think it'll be more because it always has been more.
Okay.
I think our resiliency continues to be there. And even if the data seems like it's fudged, the fact is people can get jobs.
Okay.
And if you don't have a job or the job you want, you still have gigs, you still have 1099s, you can still work and hustle your little butt off and still make money and provide for your family. So you have a labor market out there.
Sure.
And also the AI productivity and the earnings growth, especially when it comes to stock market stuff, the earnings growth is ridiculous. And I don't think that's going away necessarily.
Mm-hmm.
So, the rotation is real. And I think that the rotation away from the, 300% runs and 200% runs, maybe the rotation into what's really going to physically help the build out of AI, what's going to support this infrastructure.
Mm-hmm.
Maybe it's more utilities, industrials, materials, physical plays. I'm long commodities, man. DBC was one of my, plays again. It's we had a nice run from 22 to 30. I'm back in again around 26 and I'm going to try to hold that thing to $40. I think that the commodity need and demand is getting higher and higher. And it's also a very non-correlated play to the indexes. So I think that does pretty well, but I'm going to give the economy a resiliency, probably more so than what people think.
Me too, because that's been just so unbelievably the case the last several years. The economy has held up so much better, so much more consistently than people think. Okay, so we're on the same page on this. The reason I wanted to do this is because we just built a tool on the website. And for everybody watching, this is completely free. Head over to a1trading.com. Under tools, go to macro environments heat map. Check this out. So this is another fancy tool. At A1, we're always playing around with software tools and building stuff. So based on our answers, right, Chris, we've got 4 scenarios here across the top: stagflation, reflation, deflationary recession, and Goldilocks. And I made this tool because I do this periodically, Chris, myself, like what I just prompted you, okay, growth and inflation, what am I generally anticipating? And based on what that answer is, I can then heat seek where I think we are likely to be. So what we've described here, at least in the here and now, is a predominantly Goldilocks environment, which is lower than anticipated inflation and economic expansion. So given that was our idea, we never know with certainty. And here's the catch with all this: you never know exactly which one we're in or which one we're going to be in.
I'm going to say it's one of two. I'm going to go with more of the Goldilocks and or reflation. That's kind of where I'm at for macro.
So you're
right
most confident in thinking inflation.
One of these two.
Okay, yeah. So you think economic expansion is the more reliable? I would agree with that. Reflation, which reflation, to your point, hits hard on a lot of the materials doing well, commodities doing well. So check this out. I included in our list, of course, the major assets. We've got gold and silver here. And for listeners, what you can do with this is with your own analysis. Again, head over to our website. I'll drop the link here. Everyone who is here, if you want this in the future, it is completely free. We build all sorts of free stuff on our website. Bookmark this page. Come back to it. Just add it to your favorite browser. Use it every day. Use it whenever you want. But anyways, with our answers, what we can then do is kind of extrapolate where we are kind of aligned. So if we're thinking Goldilocks, that's going to lean into the idea that, okay, stocks can probably do okay. International stocks can also do okay. And maybe crypto has a day in the sun. That is the asset side of things. And then we're kind of neutral on gold and silver for the meantime, which I think we, Chris, you already kind of acknowledged, like, yeah, we're in a downtrend right now. Long term, it might look good. Oil. And by the way, if for those of you guys who are interested in gold, if we enter into a deflationary recession where the Fed starts printing dramatically, or we go into a stagflation environment where people just want something different, they want to get out of US stocks, etc. Both of these scenarios, which we might rotate into one quarter away from now, Chris, you never know. You could kind of also be looking at this map as like where do I want to be anticipating us to go next, right? So if we think Goldilocks is the case for the next 6 months, but that leads us into some sort of melt up where inflation's running hot and then the economy slips, maybe we want to be ready for stagflation, right? So like having this sort of map can be really useful for understanding macro and where it could be worth. Chris, I think what you might like about this, myself included as well, is the sectors down here. So we added all of the major US sectors. So in the circumstance, of course, like if we're looking at energy would do well in most environments like stagflation and reflation. Consumer staples, not super attractive when you have a Goldilocks environment, because in that case, there's better trades to be in, for example. But also if you hover over each thing, I've added a little bit of an explanation. So if I hover over staples within a Goldilocks environment, staples underperform heavily as confident investors rotate into higher beta cyclical equities. So explanations for each segment. But I just wanted to share this with the audience because it is like I said, free tool and could be useful for mapping out your bias. But
I think it's awesome, man. It's a great look, top down, big picture stuff. That is the type of overview, and that's the type of information you want to make sure you're not going to get stuck on the wrong side of some giant tsunami of direction, whatever it may be, positive or negative. So Nick, let's say like right now, what is supporting your Goldilocks thesis? I mean, yes, look, the indexes are sideways for the last 7 days, right? Like, yeah. Even though SK Hynix is down and Samsung's down, they the markets crushed Samsung, even though they beat earnings with like $58 billion, doesn't care. But it's still one of the best performing emerging market ETFs with South Korea with EWY. I think the demand is still very much there. Earnings season is right around the corner. We get through financials next week. Mag 7 is by the end of the month. We're kicking off. I mean, this is interesting, man. We have CPI next week and PPI next week. We have earnings season starting with financials again. By the end of the month, we have Mag 7 plus the FOMC. Then we go into August. I still think that August and September is like August, September, October to me is the biggest question mark of like, where is this tail risk? And whether it's up or down, it's like, where is that window going to propel us? Because look, the Fed could come in and try to run this thing hot and be like, you know what? We are going to cut rates, or we're going to pause, and the market celebrates it and it rips up to all-time highs. We have nothing more than this little 5% pullback that we just saw in June. I have concerns about that medium to long term. Sure. But if there's short-term pain for the longer-term gain, I think this market could use another flush of 10, 15, 20%. And it's not going to be fun. It's going to question. All the perma bears are going to come out of the woodworks and say, oh my God, here it is. I've been waiting for this. Right. But I think it's going to be one of the most ridiculous V-bottoms again in the next like 6 to 12 months.
I generally agree. And you know what, Chris?
Underperforming this year.
Here's my I heard you talking about it. I am on the same wavelength with you, I think, on semiconductors. If you give me that AI freak out and concern, I'm probably buying that dip with controlled risk and with a stop loss. For me personally, you know how I trade, but however you choose to approach it, I think that the AI trade will persist longer than any of us think. That's my personal opinion. I would love to see corrective moves in the market. I would love to see pullbacks. But I also kind of remind myself, like, where do I want to be a buyer? Well, I also want to buy the Mag 7. I want to be long some of these names because there's a little bit of a piece of it, Chris, for me, that there's all this competition coming for AI stuff, right? The chip manufacturers. Who does that benefit? These guys, because they're the buyers. Go ahead, compete like crazy. Make those prices cheaper on memory. Let Apple buy from the Chinese. Let the prices come down, because you know who wins? the Mag 7, the ones
Yeah.
who are spending all the money on it. So
Yep.
to me, it's like, let them compete. And I want to buy in a weird way. Like 6 months ago, I did not think of like the Magnificent Seven as beneficiaries of AI. Because again, they're the ones spending all the money on it. And I still think that is a bit concerning, but they're sitting on mountains of cash. And if the competition for chips gets stiff enough, the prices paid for these companies could also meaningfully come down. And that could rejuvenate their return back to heavy free cash flow sooner than what markets currently anticipate. So I am a fan of, if you send the market down, like you just said, if that happens, Mag 7's probably where I load up first. I would also take the stab on semis on a discount, but Mag 7 is probably where I buy a meaningful dip. The other one, to round it out, I've talked about it before, I like small caps, and I like small cap core specifically. So I've got a couple areas that I'd be interested in. And then finally, just to also talk which sectors, I also wouldn't mind picking up some healthcare, some real estate. If rates go crazy and real estate gets hit hard enough, I'd be potentially willing to take a stab there. Consumer services, wouldn't mind buying some dividend stuff. Software, I also want to be long. And GDX, I'm with you too on the idea of if gold keeps moving lower, in short term, I think it can keep going lower. Long term, I like the idea of buying some gold miners, just stick them in the portfolio.
I agree. Hey, I want to ask you a question on AI. So hyperscalers, I think that's an interesting take on their ability to kind of monetize what they've invested in, right? Or get the return on it.
Mhm.
My concern, and it may not be 12 months from now, it may be, the secular bear market type CapEx bubble from now. But right now, we as like small personal consumers of AI pay next to nothing compared to the institutional side of AI. If you're at a large fund, if you're at a large software company, if you're at a Google or Meta or Microsoft, the reason they're talking about going to open source models or going to Chinese chips or going to something cheaper is because they don't want to keep spending more and more money for these products and for these physical goods. But I don't know if the government's going to get in the way of that by saying like, you can't do that, hyperscalers, or we don't want you to do that, or there's a moratorium on everything that's not U.S. made, and you've got to be in the Microns, you got to be in the Intels, and you've got to be in everything that's U.S. based, right? So it could get very gray and very ugly. But I do wonder that at one point when AI gets so many users, and that's kind of why this is like cheap for us. Like there's so many users right now, and it's building a building, and this shows all this crazy demand. But if you with your business, if I with my business, if we were going to pay 10 times more than what we pay right now for a use case for AI, would it be worth it for you?
Probably.
Okay.
For me personally.
But I don't think that's for everybody. I think that if all of a
true.
sudden your costs go 10x,
Yes.
I don't know if it's worth it for a lot of people. And all of a sudden
For
that demand
not
changes.
using it for business, which is probably like the vast majority of numerically how many people are using it.
Sure.
I'm just using it so much for specifically coding because I'm a software engineer, and that's amazing. But that's not everybody, to your point.
Right. So, and again, that's more of like the CapEx spending, CapEx bubble type thing. And maybe that's, go out to a cycle that's 2028, 2029. Look, man, I think that there's still some room for this bull market to run. I think we are kind of dancing around the volatility trade right now. We're dancing around the dispersion. The market's going to kind of make sense of things, but dude, there's a lot of stuff that we have to digest. We have a brand new Fed that is trying to give little to no transparency. And I do think that the bond market is going to ultimately stand right. Like the bond market is standing like arms crossed, waiting for, Warsh and the team to try to get dovish on us, please.
Yeah.
And all of a sudden yields are like back to fresh highs.
So
and
Chris,
so
with
I think
that
that's the
said,
test. Yeah.
do you think, I know, so I want to talk to you a little bit about gold. I know you already talked about it, but it's right in line with the story of what you're saying about yields, right? So yields globally today, I think are being overlooked right now, just to how important, of course, the rise in oil price suddenly sends yields higher and it sends precious metals lower. You have the Japanese 2-year yield making a sharp rise today, the 10-year yield. I mean, at some point this thing matters. I don't know exactly when, but Japan, that situation is huge. We have European yields, look at this, the EU 10Y and the gilt yield up significantly today. And we see that impacting the precious metals. So, and I don't know where that ends. The situation in the Middle East, maybe we're both wrong. Maybe this time is different. I would agree with you most of the time. It's been a big fake out. You've had, the memorandum of understanding, it's over. And then, right before a big market open, of course, the headline gets walked back. I don't know if it's going to be different, or if it is different. Here's playing devil's advocate. If something does actually re-escalate truly in the Middle East, it could get very ugly, because I think the market is smart enough to pick up that most of the time these threats have been not followed through on. So I think the market has probably figured out that play. It's like every time we get some sort of, oh, here we go again, it gets walked back. So the market's probably smart enough to figure out every time that happens, people just willfully buy the dip without even getting a new headline. Could that potentially be a trap door at some point or another, where there's this escalation, people assume, oh, it's going to get walked back, and it truly doesn't, becomes a more blown out of proportion event again in the Middle East? I don't think that it's very likely. And that's why I think that if it were to happen, it would be very dramatic in markets.
I think so too. I want to talk about the yen for a second. Look, man, all this like, hey, we've had 3-4 interventions by the BOJ. It doesn't matter. I mean, unless the yen takes out major structure, I just want to draw everyone's attention to the history of the Japanese yen. This thing has room to go to like 175. So 160 mattered in 2024, and then it didn't matter. Now we're at 162 and change. It just seems like these interventions are less and less impactful. I think all it's doing is cooling off speculation. But, I don't even know if this is the carry trading any longer, Nick. I think it's just we have a BOJ that's not really turning the tide. And so if they're okay with a weaker yen and a stronger Nikkei, they'll probably continue to let that run and fan the flame of the Nikkei. Look, investors have been beyond patient with the Nikkei from a 1989 top to not breaking highs until last year. A 30+ year drawdown on the Nikkei 225. Yeah. So we are like, we're pissed at like a 30-day drawdown, for crying out loud, when the market's not making all-time highs in the U.S. So I couldn't imagine if we have more than like a 30-day to 60-day to 6-month drawdown. I mean, people felt like it was, almost Armageddon in 2022 because they've never seen a real bear market. So I still think a bear market is a long ways away, but I don't think that like speed crashes and 15 to 20% corrections are out of the realm of what we could see this year. And so what I'm doing, like literally right now, I have about 51% cash in my portfolio. Okay. It's not that I don't want to be invested. It's that I think the tail risk is extremely wide. And to me, upside is generally easier than downside. And so if we have the downside offered, I'm going to take opportunities to deploy capital to benefit from that discount, as opposed to, I think truly for me, the hardest trade is if this market just does nothing but go sideways for, let's say, the next 30 to 60 days. And this will drive me crazy. If this market from this rally goes sideways, and then breaks the structure and just keeps going higher, and we're talking 8,000 plus S&P, and that's all we got was a 5% correction. Now, granted, we had a 10% correction here, but dude, you got to be kidding me. Like, if that's what we're seeing, I'm going to be very frustrated. Now, I probably will still finish the year.
I was going to say you've perfectly categorized me in a nutshell with that. Are you kidding me? 5% discounts. That's all we get these days.
Yeah. Well, I mean, look, I'll still finish the year about 15%, and I'm okay with that. But like when the index itself is about here, and we go, let's say we hit like 15 to 20% just on the index alone, and it's like, you mean to tell me I grinded this whole year for one buying opportunity that wasn't even 10%? Yeah. That wasn't even a pullback to like recent all-time highs. It was just like this, bogus, gross, like choppy dispersion trade. It's like got the 9.98%, and then it ripped our faces off. But I'm hoping that from a technical pattern that the market is willing to test the high, maybe give a little bit more back. And it's going to feel gross. It's going to feel bad, but I'd love to see the market at least test the 200-day, get back above it. Test the 200-day, get back above it. That to me is a little bit better sign to, a better, healthier dip. to see this market have some legs to the upside, as opposed to you got to just buy the highs.
Sure.
That's my least favorite thing right now, especially when we've only pulled back about 5% here, and it just might be that 5%. But I think there's enough out there that with a new Fed, with raising rates or not raising rates, with continued bull crap in Iran right now, and then we'll see what inflation does. That was your first question: is U.S. economy and inflation. I mean, look, that also matters with midterm elections, which we haven't even touched on. But that's going to be a huge uncertainty going into October, November. I think the markets want to have the midterm elections over and done with. I think gridlock is fine. I think Trump staying in power with majority is fine. But I don't know if you saw this earlier. I'm like, I think that the market is like nailing down, like the midterms look so much worse if this Iran stuff continues, because I don't know what the end game is here. I don't know what we're doing other than just playing like this. It's Trump's snow globe effect that he does with the world. And dude, people have been exhausted since 2020 with higher and stickier inflation. You're throwing a Middle East conflict on top of that. Every day it's on again, off again. We're just over it, dude. And
yeah.
Right now it's like the U.S. is out of the World Cup, so what do we care? Let's go back to handling inflation.
Right. Chris, I threw a poll out there for everybody in the chat. Everybody seems to be wanting to know what's going on with gold. Nothing new there. Don't worry. Us too. We love keeping an eye on the precious metal. If you want to comment a 1 or 2 in the chat to cast your vote on the screen right now, you can see it there. We've got currently a couple votes for bullish, 1 vote for bearish. So cast your vote if you want to let us know what you're thinking on it. I also want to take a look for people who are interested in gold. Let's also consider, Chris, you were talking a little bit earlier about the DXY, the dollar index. So I've kind of backed off a little bit of my bullishness here recently on this one, and I'll explain oversimplified why that is. Basically, some of our growth metrics, PMIs were soft, consumer confidence was soft, non-farm payroll was soft, ADP was soft. So some of my metrics here went from glaringly strong for the US dollar to a bit more of a neutral stance. I'm not bearish on the dollar, but I am certainly thinking, okay, if we're going to get a breakout here above the 102 level, which I still think from a technical basis, like we're coming back to a 1+ year kind of range bound level. We've been stuck in a range for a long time. You and I have talked about the bond market being super efficient in the options world. DXY, of course, a lot of the same characteristics there. Sideways, not a lot of movement on a larger time frame basis. Forex volatility has been kind of quiet for a while. Dollar has started to pick up some steam here recently, though. And what I wanted to think about here with the audience is, if you're bullish on gold or bearish on gold, I think the level to watch is also the 102 level on the DXY. If we can meaningfully break higher from here, which, let me throw a couple catalysts out there that could potentially get us there. The Iran stuff blows out of proportion. The CPI next week comes in higher than expected. You get some hawkishness from the Fed. Or, for example, the jobs report, the next one around, comes in solid. I know that, yes, a lot of people pointed in my comment section. They said, hey, Nick, you know what? Dollar doesn't make sense. Non-farm payroll weaker than expected. Well, yes, but that's one print. And I think that we also have to consider that the last 3 before that were on paper better than expected, regardless of whether you believe the numbers or not. The point is the market seems to, and the market has been saying, all right, jobs data has been better than what we had feared. That's the way I would categorize it. So this was a worse than feared number, but it was just one. So I think if you're going to draw the conclusion, dollar's going to break higher, you have to answer the question, is the jobs market to stay solid? And, for example, is inflation going to ramp up again, or at least rates going to continue their rise off of a more hawkish Fed, concerns about the Middle East? There are some potion mixes here, a concoction for a possible breakout on the DXY, but I've lost a little bit of my conviction here simply because of some of the metrics on economic growth coming in softer than forecasts and jobs data. So there's a quick hint at the macro. And just to turn that back to gold, again, a stronger dollar puts pressure on gold. But now I'm kind of like, all right, prove it to me. If gold's going to keep going lower, like I've done decently well on the short side this year of gold, but now I'm like, all right, let's be rational here. Gold is something like the stock market, Chris, you just pointed out. The upside is generally easier for some of these assets over the long term. You're down 27% on gold. So while I was comfortable being bearish when all of my stuff was firing off bearish, I have to be a little bit like, okay, if we're going to keep seeing downside in gold, I need a story. I need like a really convincing, strong catalyst for why I think in the short term gold can keep going lower. And I think technicals look good to the downside, but that's kind of just not enough for me to be like, all right, I'm deploying a bunch of short capital. What do you think about that, Chris? Like, again, huge discount like that. That's a hard one for me to be like, do I really want to short gold down 30% if some of my metrics, some of my catalysts are turning back the other way?
Let me point one thing out on gold. We are very close to having this. These are EMAs, so this is exponential moving average. We are technically getting the death cross. Okay. Now, usually that's like, oh boy, the death cross. But if you go back historically and see the death cross in gold, it usually is a bullish sign. So let's go back. I mean, it's going to take a minute to find it because it's happening.
It's been a while
back here, right? Maybe back here. This would be probably the last time the 50 and the 200 tested. That would have been, yeah. So we tested as this sell off, and again, this looks like chump change compared to what we've seen with that 4-year bull market. But last time we tested, the death cross was near the low, and we rallied up back above it. Death cross over here. We see the 50 and 200-day crossing. It's like it stayed there. This was a July to October, so 3-4 months down below, but it was ultimately putting in a decent low in gold, and that was also after a reasonable correction of about 20%. And then it's sideways here for a couple of years. So yes, it's going to test and fake out. You're going to have price above, but the moving averages are very flat. Look, after this 4-year run, bullish. I mean, look, a 20% correction is fine. It's what needed to happen, and obviously it cooled off the retail mania that was gold volume. Gold option volume exceeded SPY the day that we had the top.
I remember that.
So all of the excitement, all of the euphoria has been let out of gold. But like I said earlier, this is why I hit you up a couple weeks ago, Nick. I'm like, do you have a chart on, gold reserves being bought by central banks? Because that is still a constant bid. And more, little by little, foreign holdings are trying to get out of treasuries and park into gold. And China's maintaining a very long central bank bid. They're playing the long game here. I think that they're not the only central bank doing it. And I mean, the U.S. is doing it too. The U.S. wants gold on its balance sheet. The U.S. is going to have all the gold, and if they can steal gold, they probably will. But between gold and silver, it's like it's hard for me not to look at this in the medium to long term and think that gold is going to be a good purchase. Because the one thing we've talked about is like, I think the guarantee is that central banks will keep printing money. And the one thing that might change this year with this new Fed is that, and I don't know if the markets are quite ready for it, but we are being told that Kevin Warsh is this big hawk and he's all about balance sheet reduction. I listened to an interesting session on this whole idea of what Kevin Warsh is going to do as reducing the balance sheet of the Fed. It's just passing those reserves onto our largest banks because they have been peeling back their reserves since 2008, 2009. And they're way under leveraged when it comes to, the stress test of what the Fed is carrying on since they bloated the balance sheet. So if we pass that on, our banks, our Wells Fargo's, JP Morgan's, Goldman Sachs, they will take on, I think they're down to like maybe 7 or 8% of this, of what used to be historically average, like 18 to 20%. They still have room to ramp up. And I do think that our reduction in balance sheets by the Fed might sound hawkish, but our banks and our banking sector is going to absorb a lot of that. And there's still going to be similar ample liquidity. It's one potato to the next. And it's just the Fed is going to pass it on, but it's still being juggled around. And it's still a hot potato, but it just looks different. But there's still ample liquidity in the system. So it doesn't necessarily drain liquidity. And we see these M2 cycles starting to give back or money flow starting to deteriorate. That usually means bad thing for equities. I think there's still going to be plenty of ample liquidity in the system. It's just going to other parties.
Chris, I've got 2 charts to add to that conversation in terms of big money with gold, because when we look at COT data, despite the huge drop in what's been going on with gold price, it's been down significantly in the last whatever number of whatever months. What's interesting here when we take a look at the commitment of traders data is that institutions have mostly stayed very long. Like the long percentage here held by the non-commercial commitment of traders data is showing still around a 86+% exposure staying long, as according to their holdings in the futures market. The reason this is so intriguing to me is like, okay, you've seen this flush of retail sentiment selling out, maybe forced selling, margin kind of taking them by storm. A lot of people were leveraged long at the top, as you pointed out. The options exchange going absolutely nuts with volume in terms of what's going on in gold. Well, quietly in the background, institutions have stayed very long. And again, I want to reiterate, because people have probably seen me talk about being bearish gold. Now I'm kind of more in the neutral in the short term. Long term, though, I'm kind of always a precious metals bull for the alternative appeal there. What I also think is interesting, though, is that just in the short term, if we are going to talk about maybe short-term trend continuation to the downside, which I would welcome as a long-term bull, the lower it goes, the more attractive it is in my view. From a long-term perspective, in the short term, with this little bump up here, there was something interesting that took place, and that was a very, very severe, sharp turnaround in sentiment. This is the net options volume flow. It's a new indicator we've been working on here behind the scenes for tracking options data. And what you can see is that crowd sentiment was very, very pessimistic on gold in the last few weeks. Obviously, with the price going down, seems like retail or the crowd in general chased the short selling that was going on. Well, suddenly we flipped and we changed very violently. We had a huge surge in bullish sentiment come into the market in gold in the last several days. And sure enough, that might have been a bit of a rug pull here when we take a look at the 4-hour chart. So again, crowd sentiment chasing the rally higher. Here we go. But then we still have a contention point. And this is where we still need to be respecting technicals in the sense that look at how clean this trend line has held for the last several weeks. Gold cannot seemingly get out of its own way. As soon as it gets a rally going, there's either a headline, something comes up, but even just technical wise, this level before the news hit here recently, gold was already respecting and selling off of this 4,200 level of resistance. So when I'm looking at gold price here, I'm thinking, okay, the bulls have something to prove, because a downtrend is a downtrend. At some point, the price cracks to the upside, and then maybe we finally get that meaningful rally higher. But in the meantime, Chris, the lower this thing goes, I'm happy from a accumulation standpoint as well. So if we start taking out these lows, I'm not freaking out. I'm like, hey, this might be a nice opportunity on the long term to pick up some gold. And in the short term, I just think it's respecting the downtrend that we are very much still caught up in here. So a couple of those tools here, like I said, keeping an eye on what institutions are doing. They seem to be slowly accumulating in the background. Meanwhile, options flow got very bullish suddenly, and that seems to have been a short-term rug pull in gold price. Now, all those people who maybe chased the call side here in the short term are kind of underwater on their calls that they bought. So be careful with it. I think keeping a close eye on what retail or crowd sentiment is looking like is a critical thing, especially when you have options data. You might as well use it. And Chris, you'll love us in a few months because we're building more options data. We're going to build call and put walls and gamma stuff and all sorts of things, all within EdgeFinder.
Whoa,
yeah,
now.
We're going to get there. We're
Okay.
slowly but surely. We're coming to you because you're the options guy. Anyways.
Awesome.
Real quick, for anyone who is interested in getting access to EdgeFinder, our tools are all 40% off right now for our summer sale. If you do not have access to this, if you're interested in the pulver alerts, the trade alert service that we offer, all of that is available right now at a super discounted rate. Let me just scan this QR code if you're interested in taking advantage of the sale that we've currently got going on for all these products. We will also be dropping that link in the live stream chat to speak directly to a member of our support team if you want access to our products at these discounted rates. Again, our software tools, our signal services, so on and so forth. Don't miss the opportunity because everything is super discounted right now. Chris, we got meeting minutes in a couple minutes here. What are your thoughts here on this?
Well, intraday price action wise, I mean, lows around 22. Overnight lows at 74.18. We just spiked up around 74.87. I do have some, I mean, it's still a pretty noisy day as far as gamma goes. 7,500, 74.75, 74.50. Price is choppy. Look, I kind of position myself for the day where most likely, if I'm going to, I kind of did this intentionally because of FOMC this afternoon, is that if price comes down to me or up to me and it's late enough in the day, having a $15 profit trap is likely going to give me a couple $100s to just protect and not really take on the extra risk. I don't think we're going to have a huge move in FOMC minutes. I really don't. Most likely it's going to be, here's the daily noise, and it stays in the daily noise. That could be where I see the day. That being said, going out to tomorrow and by Friday, key levels if the bears break 74.20 with a daily close or break below 7,400, it's most likely opening up to the downside. The bulls have really had a struggling move above like 75.40, 75.50 or so. And again, this is now, I said 7 days, or it's 7 days. Look, man, we've seen ranges of 7, 10, 14 days. I mean, next week, what do we have for catalysts? We have earnings, we have CPI, we have PPI. This week is just Fed minutes. That's it. So it may not be enough to really crack this downside, and the market kind of absorbed the Iran stuff overnight. Because even today, it's like the market's flat. I mean, we're down on a gap, but price action wise, we're not down on the day. But like, I think the FOMC at the end of the month is way more telling than this minutes. I mean, somebody joked earlier and said that the FOMC minutes will now be referred to as FOMC seconds because it's going to be such a lack of transparency, perhaps,
Yes, the shortened forward guidance concept. Chris, what's also interesting to me too is the Nasdaq is actually holding up the best today. Is that semis catching a bit of a bounce? Like, what's going on here? Where it is. Semis are
it totally is. Right off the. I mean, look at SMH. SMH off the 50-day moving average catches a bid, and that's just come back for recent gap fill. Go to Micron, right at the 50-day moving average, catching a bid. Go to SanDisk, right at the 50-day, below it yesterday, above it today. Look at let's go Western Digital for storage at the 50-day. A little noisy, but again, like not. It's up on the day slightly. Look at SOXX at the 50-day, catch a nice little bid. So technically, yes, I think that's what it is we got a bid. So NASDAQ today is hanging in there. I mean, S&P's down about 0.5%. NASDAQ is flat, but a lot of that is, again, the chips, the space. Dude, the one thing I've been really surprised about is look at the implied volatility rank. So this is IV rank on Tasty, 32.5 in S&P. The Dow is at 25. The Russell is at 31.
So very low.
Look at the NASDAQ. 74.7. That's why in the pulver alerts I've been doing NASDAQ ratio spreads.
The NAS has been very volatile, while the other ones have been quiet.
Because of this, and the reason why this is 74 is because of your microns, because of your SanDisk. Because look at these IV ranks. They're like 90 to 100 IV rank, and they are monster stocks, and there's monster volatility, and they're also getting larger in market cap, and so it's taking more of that weight out of the NASDAQ. I don't know. So anyway, I just think it's interesting where, I'm going pretty far out, out of the money. I can absorb about a, 50, 60, 70% correction in the NASDAQ before I take on really any ownership or any risk. But time is my friend. I mean, my portfolio is pulling in about $2,600 a day just with time.
Very nice.
And like I said, if all we get is that stupid 5% correction from June and we go up to all-time highs and that's all we get, I'll still be up, about 15% for the year, which is not the end of the world. However, I'm not going to be happy with that. Like, I feel like, man, I did miss something. I did underperform. But at the same token, it's like, dude, you can't expect to grab an irrelevant stock like freaking SanDisk. That's a digital camera memory card that now is a 700% gainer. It's like, it just does. I don't know. So I'm not beating myself up too badly, but it does frustrate me.
With that volatility, obviously comes the other side. I mean, I'm with you too. It's like part of me wants to, it feels like gold did. We talked endlessly about how gold felt like, man, I wish more of my portfolio was just all gold here and my year would have been even better, right? You can always kind of play that game. And I think that it's happening right now with semis, because look what happens a lot of times to those parabolic run-ups. And I think if you look at, I was looking at this earlier, semiconductors, SMH, I've never, ever, ever throughout all the history of watching these things, they've never been this far away from our monthly chart moving averages. This thing is from a 20-month moving average, 40% away to the downside, I should say.
Oh, it's crazy.
From the upside, 64. I mean, that is unbelievably unbelievable. If you want to call a chart overbought, not that I think that carries much merit, because I think overbought can get more and more overbought. I'm not a big believer in trying to call something, call it top on anything. But I look at this thing and I think when this thing does want to reset, look at historically, I couldn't find a scenario where we had gotten that far away. Maybe this is the closest example, 2024. And it reset eventually, dropped pretty hard at one point from peak to trough there. That's a 40% drop. It happened over here. This was a 29%. So these semiconductors, when they do want to drop, they can drop violently. 45% pullbacks are kind of the norm in a down market for these things. So, what kind of drawdowns could we experience with this one? If it was to go retest the stack again, which is a normal, occurrence, maybe on like the daily chart, just getting back to the 200-day moving average, is a 27% drop. If you're looking at the weekly, which again, this would be a pretty severe drop, but that's a 59% drop on these stocks. So the way I think about it is like, these things are hype. They're exciting. They're an incredible technology. I don't want to bet against them per se, but I also acknowledge that when these things do want to pull back, the pullback will be violent and it will hurt a lot of people, just like gold did. Leveraged funds were going crazy for gold. Everybody was margined long gold. This hurt a lot of people on the downside. And I think that's the way markets often behave, is they, suck people into the excitement and then they spit them back out on the other side.
Yeah. And I think this year that bulls and bears both are going to be tested equally.
Yeah.
Like it's going to be the psychological test. It's going to be the monetary test. Look, there's literally, short-sided funds. That's all they do is short sellers, right? There's long short funds. There's fixed income structured vehicle funds. There's all sorts of ways to tackle the markets. I'm in the Financial Juice print right now. I'm looking at some of the headlines for FOMC minutes. I thought a couple interesting tidbits. Some policy firming would likely be warranted. That's a highlight there in red. Fed staff forecast for inflation in 2026, 2027 was higher than an April forecast, reflecting Middle East war and effects of the AI build out. Right now, what's crazy, Nick, is Apple just mentioned this with their iPhone costs having to go up. They're looking for, cheaper chips elsewhere. They're looking to go back to, more of like the open source models or something cheaper. AI is actually adding costs to everything: storage, everything computing power, everything chips. And that's not good. If anybody's in this space as a gamer, your Xboxes, your PlayStations, they're all now like consoles are pushing up towards $800 a console or $1,000 a console. The games are getting larger and larger. GTA is going to be one of the most anticipated releases in November, if it's not delayed. And it's probably going to be like a 150 to 200 gig game by itself. And so it's like, unless you're adding, terabytes or more of hard drive space, you can play 1 to 2 games on your PlayStation without having to copy it and throw it somewhere else to play one game at a time, which I know drives me crazy.
Yeah.
But anyway, I like AI
file
right now is actually adding to inflation. Even though this is supposed to be deflationary pressures, you put everything into AI that's adding cost to everyone that wants AI and converting to AI. The bottom line is going up right now. And so, the offset is tech is letting go of people so they can have that overhead savings and put it into build outs and R&D or, finding more, AI bandwidth. But the Middle East is just, it's a nagging effect in the market. I don't know how this is good. I don't know how this is an end game that we really cycle through. It's like, and maybe there is a silver lining that I'm not seeing. Maybe there's an end game here that I'm not seeing. But to me right now, in this time when midterms and everything are so pressing and populism is rising, I mean, there are some extreme like right policies and extreme left policies, and the left policies are gaining a lot more traction because people that are so frustrated since 2020 with living hand to mouth, living paycheck to paycheck, getting frustrated. Dude, I mean, you can only keep your thumb on people for so long, and it feels like there's no end in sight. I just don't know what a Middle East conflict is going to do. That's good for this. And think about this, dude. We're talking 4% away from all-time highs in these indexes, and we've seen gold and silver both rally 100+%, oil rally 100+%, individual stocks in semi-space and AI rally anywhere between 100 to 700%. And we're still in a war with higher inflation, with an unknown of the Fed, with a brand new regime. And this is why I'm like, you can't bet against resiliency, because it can just climb this wall for a long time until it stops. And I do wonder if the big move at the end of this CapEx bubble, if that's in fact what it is, if this big move is going to be a black swan trigger, or if it's just going to be the market rolls over and just doesn't want to come back for a while. I don't know. But for right now, I feel like what we are going to have to do for the foreseeable future, let's say the next 30, 60, 90 days, is be patient, be ready to pounce on good opportunities that the market gives us a flare up. I mean, the VIX went from 15 and change to 19 today, but then it faded back down. But any type of flare up in the VIX at 20 plus, I'm probably selling premium. I'm probably playing it conservatively. And I'll just keep like adding to that, time decay total for me, because that's helping. But I'm just going to stay out of the way. I just feel like the one thing I'm not interested in doing without defined risk is playing like high risk stuff. And I'll be pretty conservative through this whole mess and then figure out if there's better price discovery for me to jump in and be more aggressive. But at this point, I can't justify being aggressive right now.
I agree. And I think patience is it's the only strategy that I can actually like reliably think about. When I say patience, what I'm talking about is waiting for dips. If you're watching indices, like I do have I know Chris does also, like a predominant long outlook on stocks, but the risk reward when they are making these kinds of moves and you have these sort of high flyers in specifically tech stocks, et cetera, the risk reward is hard to justify chasing. And so, patience, waiting for those dips if they happen. Chris and I, whenever the markets are making those moves, it never feels good, but it does feel good from the sense of we feel like we have more of a clear, like, okay, now I know what to do. Like now I have something to do with this. I can work with a pullback. But what is really difficult for traders who are kind of waiting for those swings, can be really difficult to wait through a market like this where you're chopping sideways. But meanwhile, in the background, you have, semis up 1,000% in the last, 2 years or whatever. So patience is a virtue in markets. I think also same thing with gold, having had the patience to wait for dips after you saw these things going parabolic, served people who waited very well. I mean, I don't know how better to compare things to this. This was like the perfect example of like FOMO was so real with gold when it was doing this. It was like, man, I just wish I had more gold exposure. This thing literally felt like it never went down. Every little red you would see on the screen for gold during this time was immediately bought up, and it was up 1-2+% on the day.
Yeah.
And it's like during that time, any little pullback felt like, oh, finally we're getting something, until you had a 30+% drawdown. So that's how markets can sometimes really fool people. Is you start looking at a market like the S&P, or you look at gold, or you look at SanDisk or Micron or whatever, and you say these things literally never go down. And then suddenly everything changes and the patient players at the table step up and play their hand. But where most people go wrong is they over leverage, they don't actually have a strategy, they get caught up in the noise, and then they get punished when markets actually truly change dynamics. And I think patience here will ultimately serve us well, because I think we did okay with the pullbacks. Would have liked it personally to have stayed pulling back, giving us some more opportunities. But hey, you can't control what happens. All you can do is control your risk and take stabs at the market that makes sense in accordance with your risk management and your strategy. And for me, if you get the sell-offs, you get the pullbacks, it looks attractive. I will say the most attractive spot that I do think is coming into the picture again, Chris, is your theory with selling cash secured puts out of the money, stuff on precious metals. I feel like precious metals are already kind of discounted. I say kind of because remember, we're working off a ginormous
monster run.
So I do think that there is room for this to keep coming down, but I do think it's a more attractive entry here for gold than I would say with stocks. That's my personal opinion right now.
I do agree. And look, I'm going to share one kind of scary outlook for maybe this year. Again, call it tail risk, call it whatever. The Japanese yen flinches and breaks the market for a couple of weeks, or whatever. Trump forgets to taco one day, or Kevin Warsh decides that we're going to, hike rates 3 times this year, like Bank of America said, and the market's going to freak out because we truly do have a hawkish Fed, or something I'm not even mentioning. Look, man, I am literally selling trades down here.
Mm-hmm.
Okay. Now, the reason I'm not doing it all the time is because I'd like to see the VIX.
Yeah. Give you a little more juice for it.
Give me some expected moves that are wider, and let me go out, 4 to 6 months to take some of these trades and stay out of the way. But I think that what we may end up having is choppy, maybe a fake out, maybe a pullback.
Mm-hmm.
I could see the markets honestly retesting these March lows. This would be just like 1998. 1998 was up 20% year to date into like July, and then experience a full correction of the entire move, only to finish the year 29% higher.
Sure.
Like it was like
Crazy.
head spinning volatility. And I know that this isn't 1998 and this isn't 1999. And for all we know, it's not 2000, 2001 either. So I'm just saying that this is what I'm prepared for. And if I'm wrong, at least I'm prepared for the worst case scenario, or maybe one of the worst case scenarios, versus if I'm right, time is money and I'll be okay.
Yep. And for
Right.
listeners, what he's referring to, he says that time is money, just because I know not everybody is an options trader. Chris is a big fan of selling puts, selling options in general, building strategies with options in which when time passes, the value of those options are losing value because you're the seller of those options. You're enjoying that. So while obviously it's nice when the VIX pops and you can get a lot of premium for selling those options, in the meantime, we're kind of just, sitting on our hands waiting for opportunities, because I do some option selling as well. So,
Yep.
yeah, Chris, I think you're on the right page with that. I know, for me too, it's like, man, you really have to, your patience gets tested waiting for that kind of volatility. But I
sure.
do think being positioned and open-minded to all that vol in microns and SanDisks and Korean stocks and all that stuff, if that experiences one breakaway move to the downside, I think it drags most global markets to the downside. And then I think we can pick our spots. Like that's honestly what I think could take place in the next few months. I know there's midterms. I know there's, Iran. I think it's mostly all the semiconductor stuff. If you get something that freaks that side of the market out, I think it probably drags everything lower for a little bit. And then maybe we can pick our spots. We can find, industries. I actually would potentially like the idea of buying dips on non-AI stuff, even more. So, we'll see if we get that opportunity.
Yep. And the day to day, it might be not very exciting, to be honest. I mean, and look, summer trading doesn't mean like, that sell may go away is BS. Because if you look at the performance from a June to October, it's pretty much as good as November to April.
Yep.
Over the long run. So, again, I mentioned the Nasdaq volatility. It's as high as it's been since 2002. That's one thing that's really concerning with like how concentrated the Nasdaq has become with those higher market cap chip stocks and storage stocks. So volatility, yes. The concentration in South Korea, I'm not sure exactly when SK Hynix is going into the US, or we're going to have like the ADR version of it. Did you see also, is it BlackRock that's going to do a mini version of the NASDAQ? They're going to call it IQQ. They're trying to make a cheaper version of the NASDAQ. So instead of the QQQ, you can trade the IQQ.
Oh, nice.
And I'm not sure when this goes live, but it's going to be similar basket stuff, different weightings, but a cheaper version. It's like, I just think this is a BlackRock grab for liquidity. Again, these things have some concerning like echoes out there because, SpaceX IPO, Anthropic and OpenAI, the fact that they're not chirping to go public right now is I think it's a good thing that we're not trying to stuff all these IPOs down the market participants' throats right now, because that's so much of a liquidity grab that it does make me think that we are a little bit toppier if that's the case, that they're all trying to go public right now. If you kick the can down the road by 6 to 12 months, come into like Q1 or Q2 next year, I think the markets can digest SpaceX, which I know is back down to IPO levels, by the way. So it's not like it's performing super well. We're at 146 today.
Right.
I was prepared for SpaceX. I mean, you have this trade in Pulver alerts. I did a 125 by 120, or I'm sorry, 125 by 100 by 75. That's a little fancy ratio spread and a naked put where SpaceX from IPO price can literally fall 50% lower than IPO price before I take on any risk or assignment. And that trade's going to be worth like $4,000.
There you go.
So there's ways to trade it. And I'm still in, like, I bought some shares at 150, I dollar cost average, and I've got another one at 105 and another one at 75. I'll buy shares, but I was not chasing that little, 3-day pop for 20% that everyone got really excited about, only to see this do exactly what we've seen mega IPOs do for history, which is they pull back. And we've had, what, a 30+% correction. That's average, dude. 30 to 50% is average for these mega IPOs.
Yeah. Yeah. Chris, also just to show what you were talking about, I think the IPO stuff is fascinating. I wouldn't be surprised if you do get the opportunity to scale into that position too. Here's your sell in May, go away, back test the last 10 years. May, June, and July, the last 10 years have actually been outsized winners for buying the S&P 500 during those 3-month periods. So just to your point, again, that concept, that's where you got to be careful in markets. You hear all sorts of like sayings and expressions and mottos, and The problem is, not always are they true. Here's an example of a strong outperformance period where most people would say sell in May and go away. So just something to think about, and why having the right tools is so important in finding edge in markets, essentially, which is why we named it Edge Finder. It's an attempt to help traders build insights and to improve their edge overall. Chris, I think we're out of time here. We've been going for 3 hours, 20 minutes overall. So we've been hanging out for a while, but I want to thank you as always for coming on, sharing your thoughts, opinions, and we'll continue to wait out patiently for the opportunities we're looking for.
I know we'll have to hold hands if we have to get more patient, dude.
I know. For real.
All right, it's all good. Thanks for having me. And dude, I'm loving what you guys are doing with the Edge Finder, keeping the fresh tools and stuff. I love the macro heat map you showed me today. And yeah, I want to see some more of those option stuff you're talking about building. I'm excited.
Thank you, man. Yes, we've got it coming. That is inevitable. That stuff is too powerful not to keep building in. So as always, Chris, pleasure having you on. We'll see you next time, man.
Sounds good. Bye.
See ya. Guys, last thing I'll say here as we close out the show, Chris and I, like I said, we've been doing this for a very long time. Chris longer than myself. Having the right tools, having the right stuff to build out your analysis is critical in this day and age. If you do not have access to Edge Finder and you are interested in getting access to our tools, it is a one-time payment to get access to our tools. You can get access to our macro screeners, our market sentiment screeners, our technical readings. You can track institutional money through our commitment of traders tracking tools, our options tracking tools, and so much more, all in one browser-based platform that you can use from your phone, from your desktop, from your laptop, whatever, and take it anywhere. I never leave it home. I'll never leave home without it because I've always got my two here, my charts and my charts and graphs on Edge Finder. If you don't have access to it, like I said, scan the QR code below my camera here to take advantage of our summer sale discount. It is the biggest discount that we do all year long. You can also scan the QR code, or you can click the link that's been dropped in the chat to speak to a member of our support staff. It is a real person who can set you up with a payment plan if you need access to it and get you exclusive live stream discounts if you message in. Like I said, link for that is in the live stream chat or in the description of the stream below. That's all we've got time for today. Thank you for hanging out with us. I've got a video coming you guys' way, updates on what's been going on in my own trades. Stay tuned on that. It'll be up in just a little bit. See you next time. Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.